then, and with that eye on the energy markets, you're not probably going to get much of a lift then for the FTSE 100 from energy or basic resources. But despite that, the FTSE 100 is pointing to gains of 25 points. Over in Germany, you're looking at a stronger session with the DAX futures looking to add around 127 points. And over in France, the CAC 40 looking to add around 0.8% at around 7,455, pretty.
Again, a really interesting dynamic, and whether or not that green on the screen actually sticks is going to be a crucial question. We are officially having the markets open as we wait for those numbers to actually roll in. Let's talk about where the anomalies actually are. I really want to double down on this idea that the commodity space is just not feeling this global rally that you were seeing both in the equity and the bond markets. That's interesting, given that you are actually seeing dollar weakness. That should be a built-in tailwind. Instead, you are continuing to see the entire commodity space in the red, and how much of that is a geopolitical situation versus what you are actually seeing in terms of just how much exposure people actually want to a very volatile sector where you are seeing so many different cross currents. I'm going to bring it back to the equity picture because, lo and behold, even in just the first 40 seconds of trading or whatever, you are seeing green on the screen actually hold from that futures trading. Take a look at the French index outperforming here by 0.9%, a massive move there relative to, say, for example, the FTSE 100, which is only higher by 0.4%. We like to look at the periphery as well. The IBEX and the FTSE MIB both higher by, we'll call it 0.4%. We'll call it 0.5% as it continues to shake out. Tom, green on the screen for now.
Across the 12 main sectors that we look at, you're seeing that strength as well, particularly in the industrials, gaining a little over 1%. Tech, that story is there in Europe as well, with a handoff, of course, from the US after that tech-driven rally that we saw, a fresh record, of course, for the S&P on Friday. And tech as a sector here in Europe now adding 1.2%. Autos in similar territory, a very positive session so far, just in the first minute or so, of course, for the auto sector. That's giving a lift to the DAX over in Germany. That sector currently up 1.2%. Banks up a little over 1% as well, as are financial services. The less, or the more muted gains, I should say, coming through for the likes of healthcare, just up 0.2%. And energy, despite the fact you've seen a little bit of softness so far in the session for Brent and WTI as a sector, you're actually seeing a very modest gain of 0.2%. But really, the focus of this optimism is now within the technology space, within autos, within banks and financial services. And Chrissy was flagging the outperformance of the CAC 40, now up 0.9% across your benchmark European stock 600, adding 0.7% so far this Monday, Chrissy.
All right, let's take a look at what the Markets Today team is watching. Sam Unstead will not leave us alone. He joins us again from our Markets Today blog this morning. Sam, we did a lot of focus on the UK earlier. Let's talk now about the ECB.
Yeah, so I think a nice story on the terminal this morning about the jobs market, which remains pretty strong across Europe. And this is partly why I think you've seen over the course of last week the ECB pushing stronger and stronger towards June as potentially the time when they're first going to hike rates. At the moment, there's still a better than 50-50 chance priced in for April. I think as you get to the meeting this week, what you may see is more pushback and then finally a kind of convergence between these rate expectations amongst traders and what the central banks are saying coming through for the ECB at least.
Meanwhile, Sam, and this is a recurring story now, the great China sell-off continues. There appears to be no floor to be put under this Chinese market.
Yeah, I mean, I'd be interested to get your kind of sense of this, Tom, but you know, my sense of it is, I came on here so many times over the course of last year, and we would talk about economic stimulus going in China and disappointing, never quite enough to really change the mood. And that's been the story for quite a long period of time now. And it feels as though we've come into this new year and investors are just like, well, that's enough. You know, we're going to move our money elsewhere. And so you're now seeing this really come through in January. And as you kind of mentioned earlier, the sell-off is really quite significant, especially in Chinese stocks. But I'd be interested to see what your sense of that
so the narrative seemed to be towards the end of last year. The question also started to shift to whether or not the sum of the parts would be enough. All these different measures, these little piecemeal measures, whether you combine them together, whether that would be enough to put a floor under the markets. And clearly the answer so far is no. And then you had the Prime Minister, the Premier Li Qiang, in Davos, basically making the case that they are not prepared to add additional big bazooka-style stimulus to this economy, that they are prepared to suck up slightly lower growth. Of course, they hit their target for 2023, and we'll see how that adjusts around 2024. But when you speak to people on the ground in China, the lack of optimism is almost universal. Just on an anecdotal basis, it's very hard to find anyone that I know from my sources of contacts who is feeling anything close to optimistic around that economy.
Yeah.
Well, and at the same time, it's interesting that we talk about what the growth driver actually is, because when you look at the equity market in particular, big tech seems to be the driver. At a time, by the way, we're getting headlines crossing the Bloomberg terminal as we speak that ASML retaking the spot as Europe's #3 company by market value. It's not big tech necessarily, but sort of.
Yeah, no, they're big tech. Maybe not the most exciting big tech in the whole world, depending on how you feel about lithography chips. But I think, there's the story for the US earnings season as we come in. You guys already mentioned the S&P 500 hitting another record. We've seen this previously, where things have looked a little bit frothy going into earnings season, and then any kind of disappointments on the main growth metrics for the big tech companies have been punished quite hard. So it is set up for that to happen, over the course of this. So the companies, we start with Netflix this week, Intel, and then next week into Microsoft and Alphabet, they are going to have to hit those key growth metrics in order to keep up that rally.
Really interesting dynamic there. Sam Unstead from our Markets Today blog. We thank you so much. You can get more from him and the team on the front page of the Bloomberg UK website, or simply by typing in TLIV Go on your Bloomberg terminal. Let's get to some of the other top stories we're following on the Bloomberg terminal, starting in the hedge fund space. LCH Investments saying hedge funds delivered $218 billion after fees in 2023. TCI made $12.9 billion to top the rankings, followed by Citadel with $8.1 billion. Meanwhile, Citadel and Millennium scooping up hedge fund founders in Asia as they shut up shop in exchange for big pay. Now from Wall Street to retailers, Macy's has rejected a $5.8 billion takeover offer from Arc House Management and Brigade Capital Management. The U.S. retailer claimed the offer lacks, quote, compelling value. Macy's has struggled to compete as shoppers shift away from department stores.
Now, the U.S. Federal Aviation Administration is recommending airlines inspect another Boeing 737 model aircraft that also has mid-exit door plugs. The plugs on the 737-900ER are the same type that ultimately failed in an Alaska Airlines blowout earlier this month. Boeing says it fully supports the FAA's action. United Airlines says it expects its checks to be completed in the next few days. Travellers flying to the UK and Ireland, meanwhile, are being forced into lengthy diversions, even to different countries, as Storm Isha throws planes off course. One supposed 2-hour Ryanair flight ended up being a 10-hour circular adventure as Europe's largest discount carrier faces an outsized impact. The UK's meteorological agency has also warned of a danger to life and risks of extreme structural damage. Coming up, we're going to look at the stocks on the move then this morning, including Crédit Agricole. That's as the French bank takes a minority stake in digital payments company Worldline. That is next. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears. Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
DOJ or other authorities
could face bigger challenges next.
It was going to keep winning World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
The 2024 nominating contests are here, and the candidates are making their cases to New Hampshire voters ahead of the primary.
And we're off to New Hampshire.
Bloomberg is live in the ground, bringing you the fastest news.
Trump is leading by a long shot.
Insightful interviews.
These candidates are trying to target independent voters.
And the most informative analysis about what it all means for November's presidential election.
What is your path to the nomination?
Coverage continues today, only on Bloomberg.
This is Markets Today. We are 10 minutes into your European trading day. Let's check in then on the top benchmark, at least the Stoxx 600, posting gains of 0.6%, so taking the optimistic cue from the US session, of course, on Friday, where the S&P closed at a fresh record high. US futures, by the way, looking to add to that, up 0.2%. Let's dig into some of the individual names, though, on the move right now, and cross over to Joe Easton. Joe, what is catching your eye?
So we've got Worldline, one of the best performing stocks in Europe at the moment, up 5% over in Paris. Crédit Agricole taking a 7% stake in that company, something that had been rumoured. That is boosting that payments processing firm this morning in Paris trading. We've also brought up Belimo, one we don't look at too much. This is over in Switzerland. It's the maker of air conditioning units. Big profit warning out of them. It's around a $5 billion market cap, but they're saying a slowdown in construction is weighing on those orders. So that is pretty interesting from the building sector today. Then S4 Capital, an 8% jump for that one. Martin Sorrell's company sounding a little bit more optimistic on the outlook for ad spending in terms of some of those tech companies. They are still predicting a decline in sales this year, but as I say, just a tweak in some of their financial guidance, and we're seeing Martin Sorrell's former firm WPP getting a bit of a read across, was up around 1%, ticking down a little bit now, but advertising potentially getting a boost this morning. Then there's more excitement over in the gambling space. We had that big news of a takeover. Kindred up 17% over in Stockholm. This is as Le Français de Jeu announces a takeover. The French firm, that one gaining 5% as well. And we're seeing a read across in a couple of other firms, including the Swedish rival Betsson. That has a big unit here in the UK and the US as well. And Entain, the big British firm, the Ladbrokes owner, all of these rising today as Kindred gets that unexpected takeover offer for the Swedish firm. Kindred gaining 17% now. I did try and think of a bunch of gambling puns. They're hitting the jackpot. Their chips are down. They're showing their cards. All of those, I throw them in. Then we got ASML. You flashed it up earlier now. ASML overtaking Nestle as the third largest company in Europe by market cap. 281 billion euros was where it is at when I last checked, and ASML up 2%. This is as Bernstein upgrades the stock to outperform this morning. Then we've got Sage Group. This is the UK software company, enterprise software payments processing software as well, down 1.7% as Barclays goes underweight. Then staying in the UK, we've got Segro up 2.6% as Citi goes buy on that one. They say that that is a way to play the declining interest rate outlook. It's real estate potentially getting a boost. And finally, we've got Genmab. This is in pharmaceuticals, down 2%. Citi as well on that one. They're cutting it to sell this morning, saying that some patent disputes will weigh on the Danish firm, and that one is declining in Copenhagen.
Joe Easton there from our equities team. We thank you for walking us through it and attempting those gambling puns. You can try again tomorrow. Let's talk a little bit about the broader central bank rate conversation, though, as well, because as Joe was talking about some of the individual equity movers, the macro matters just as much. We're joined now by Anika Gupta, Director, Macroeconomics Research over at Wisdom Tree. Anika, before we dive into the macro, I really want to talk about this equity market here and how you're viewing it in terms of what really matters, what's really driving it. Are we still looking at kind of these headline nominal figures, or are profit margins really being scrutinized this earnings season?
Morning, Kriti. Yes, I think it's going to be very, very important to look at the key drivers. I think the first very important driver for the equity rally is expectation of rate cuts by the Federal Reserve and developed market central banks. And the second very important driver will be the earnings season, the Q4 earnings season. And what we've noticed so far on the first driver is expectations for rate cuts have been pared back. They were built up, throughout the strong rally that we saw in Q4 2022. And just this week, we've seen expectations for March rate cut by the US Fed come down from 80% all the way down to 47%. So that clearly, is an important headwind for the equity market rally. But I think on the second front, the second important driver being earnings, the Q4 earnings season. So far, we have seen, it's early days, but we have seen strength coming in from the earnings front. The key factor that we are looking at within the earnings season is profit margins. Given the fact that we are seeing inflation coming off, we're going to be paying particular attention to whether companies are able to keep that earnings power intact. Given the fact that we are expecting to see that pricing power actually decline with inflation coming down, so far it's been quite strong. But this is a key guideline for equity market investors as we progress into the earnings season.
Okay, Anika, we definitely want to get your views on where you are finding that relative margin resilience across the corporates. As again, we look at an important week for this earnings story. But before we get there, to the macro, and a redhead crossing the terminal right now, Italy and Germany, the yield spread dropping to the lowest in almost 2 years. Anika, clearly there is a view that the European Central Bank will be moving to cuts at some point this year, potentially in the second half. How are you thinking about the potential, though, for disappointment if inflation is revived around some of the geopolitics? To what extent the market is sensitive to that?
Yes, that remains a very important wild card that is playing out in the markets, and that geopolitical uncertainty definitely raises that sense of caution. We are seeing attacks on the Red Sea and the Middle East conflict actually spread. And if it isn't contained and it doesn't remain localized, that is going to result in a new kind of supply disruption, similar to what we have seen during the COVID pandemic. And I think regarding Europe and the narrowing of the yield spread, I think that's a very important factor, which is telling us that. And similar to what we've been pricing in, that if any central bank is likely to pivot first, it's going to be the ECB. And that's because of the economic data that we've been seeing. The economic data has been strengthening in the US. The economic data has been quite lackluster in Europe. The key factor that the governing council, the ECB, is looking out for is the wage negotiations. And that, as they get a bit more clarity on that, that is going to be the deciding factor for them. We believe wages are going to come down. Yes, they've been accelerating after 3 decades of being in a doldrum. Now they're beginning to accelerate, but we do think they will start to cool as we progress through 2024.
In terms of progressing through 2024, though, I'm curious about how much of the earnings story, the macro story, the bond momentum is really getting pulled in from 2025. I'm curious about just whether or not the 6 to 9 month lag that's traditionally baked into markets even applies here at a time when the geopolitical situation is so fast moving. What do you think?
I think it definitely is playing. We are seeing a carryover take place. We've obviously seen monetary policy acts with a lag, and we've had exactly 24 months play out from when the rate tightening cycle started, in the U.S. And so far, it's been pretty stable. The economic data in the U.S. has been quite resilient. We're only seeing, very small cracks beginning to emerge. Yet the broader economic data has been resilient. Be it the consumption power of the U.S. consumer, that was again validated last week as we saw very strong retail numbers. We saw the Michigan, sentiment actually improve at the highest pace since 2005. So for the U.S. economy, that's really important because 70% is reliant on the services sector, which boils down to the U.S. consumer. And the U.S. consumer still seems fairly resilient.
Anika, for anyone sitting there with cash still on the sidelines, getting 4 or 5% in the money markets, where would you say now is a time to allocate that? Which sectors stand out to you in terms of the opportunities?
Well, I think, Tom, given the fact that we are seeing rising geopolitical risks, I think commodities stand to play a very important role. If you reflect on the last month's performance of commodity markets, we've seen energy as a subsector within the commodity spectrum really stand out with its geopolitical hedging credentials. We've been able to see, despite broader weakness in the global economy, energy prices have been able to offset that weakness of demand by posting a much stronger performance because they're able to, improve in their performance given the rising geopolitical risks. Another subsector within the commodity spectrum, be it precious metals, we're seeing gold, which actually faced very important headwinds back in 2023, is now seeing tailwinds with expectations of rate cuts, a softer US dollar, and at the same time, reals actually coming down. So I think as these important headwinds clear, precious metal also stand to benefit from its geopolitical hedging credentials. So I think it's important to diversify across assets, but I think commodities is somewhere where we are seeing, a definite strong valuation opportunity.
Okay, Anika Gupta, on the case around the energy sector and precious metals as a potential hedge in this current environment. Director of Macroeconomic Research at Wisdom Tree, thank you very much indeed. Coming up, analysts expect some good news for semiconductors with fourth quarter tech earnings starting this week. We discuss what to look out for next. This is Bloomberg.
Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money, And number two, don't forget rule number one.
You later got asked to be the head of USAID.
I got that job when I was 36 years old.
36 years old. You're running USAID. How many employees does it have?
We had 11,000.
And did you feel qualified to run something that big?
I did until, the work started.
Welcome back. Happy Monday. This is Markets Day. 24 minutes into your European trading day. So seeing pretty decent gains across the European benchmark. 0.8% across the European stocks 600. Top of the list is La Française de Jeux, currently up 5.3%. US futures also pointing to gains of between 0.3 and 0.5%. Now, the clouds appear to be lifting for the global chip industry, promising relief for ASML and ST Micro after they report results this week. Focus will also be on LVMH on Thursday for signs of a wider luxury slowdown. For more on this, the preview, let's bring in Bloomberg's Maggie Schultag with the details then. Maggie, we've got the likes of ASML and ST Micro then reporting later this week. What are you going to be looking for when it comes to their numbers?
Yeah, so it is indeed looking like the worst of the downturn may indeed be over for the sector. Of course, we've got ASML reporting on Wednesday. Their sales are still expected to have slowed to less than 8% in the fourth quarter. However, given that a third of its revenue comes from TSMC, the bullish outlook it gave last week is really having some positive read across there and is really making it pretty well poised for a sales recovery going forward and into 2025. Later on in the week, we've got ST Micro reporting. Now the chip maker is expected to post earnings in line with guidance, a bit more muted, driven mainly by its high automotive exposure. Now that is the only one of its segments that is expected to post positive growth in the fourth quarter, however. Despite a couple of warnings from some US peers in the last couple of weeks, analysts are still cautiously optimistic about this one, given just how resilient demand has been for automotive chips.
Talk to us about the demand then for telecom, for example. Ericsson and Nokia, what do we know?
Sure. I mean, there's been a pretty sluggish sales trend ongoing there, which is still likely to affect their reports this week. Now, we're pretty likely to see a bit more of a divergence between the two. Ericsson reporting on Tuesday, it's predicted to report an adjusted EBIT 20% lower in the fourth quarter. However, things are looking up in the midterm, given it recently secured a contract worth $14 billion from US carrier AT&T. Now that's really going to give it a boost and really going to ease investor concerns going forward, given the sluggish sales it's posted so far. Things are not looking quite as rosy for Nokia. Of course, it lost out on that very important contract. It has already flagged that it's going to miss its full-year expectations, and it has also cut its long-term profitability outlook in December. Now, it's really got a lot of work to do to instill that confidence back again, and it's really going to have to show that it's got the means to implement those ambitious cost cuts that it has put forward.
Yeah, one contract perhaps making or breaking either one of those companies. Bloomberg's Maggie Schultag, we thank you so much for bringing us that earnings preview. Coming up on the program, a European tech company launches its tele-driving service in Las Vegas, spearheading a new approach to driverless vehicles. We speak to their co-founder and CEO. That interview next. This is Bloomberg.
successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the This is Markets Today. We're about 30 minutes into the European trading day. I want to get to our top stories. European stocks and U.S. futures march higher for another rally in tech stocks drives the S&P 500 to an all-time high for the first time in 2 years. In U.S. politics, Ron DeSantis bows out of the presidential race. The spotlight now on tomorrow's New Hampshire primary. Can Nikki Haley close the gap with Donald Trump? Plus, hundreds of thousands of Germans flood the streets to protest against the far-right AfD's party's deportation plans. We are live in Berlin. Tom, there's a lot to digest here, from U.S. politics to German politics to monetary policy, the corporate story. Have fun digesting all of that.
I mean, top line, European stocks ended the week lower last week, but now that optimism, the handover from that record high that we got from the S&P on Friday, it is there. And we've been able to look through, again, another grim day for Chinese stocks, with currently the European benchmark in pretty decent health, currently adding 0.8%, a little under 0.8% at 472. Here in the UK, the FTSE 100 is adding just 28 points, slightly less being added by the FTSE 100 than what we're seeing in the likes of the CAC 40 and the DAX over in France, where you're seeing a little bit more optimism, currently up 127 points. And certainly the auto sector is helping that lift for the German DAX, adding 0.8%. The FTSE 100 is still below that 7,500 level, so we need a little bit more conviction to get back up there. But for now, it is risk on across these European equity markets. Let's split the board then and see how things are breaking down sector by sector. Tech is still so much part of the story, particularly when you unpack what is happening in the US. It was the tech index, or at least the big tech names, that drove those record highs for the S&P. And we, of course, we look ahead to the earnings to build out that picture later this week. Will it confirm some of the biases or lead to question marks for just how far that rally can run? So the tech sector here in Europe getting a lift as well from that story, up 1.6%. The semiconductors very much in focus. You're seeing decent gains from the likes of ASML, of course, the maker of those high-tech lithography machines to the semiconductor space. Financial services also having a pretty decent session, adding a full percentage point. Banks adding 1.3%. And here's the autos lift as well for the DAX, adding 0.8%. Across all of the 12 main sectors that we look at, you are seeing gains. Even in energy, where you've seen a bit of pressure coming through for Brent and WTI, energy as a sector is up 0.2%. The least optimistic amongst these sectors is basic resources, currently close to flat, just gaining a little under 0.1%. Across your benchmark, gains of 0.8%. Listen, I mentioned the auto sector, and that helps me pivot to the next story, because a Berlin-based startup has become the first company to drive cars on public roads in Europe and the US without a person inside. The teledriving technology firm, VEY, enables electric vehicles to be remotely controlled and delivered to paying customers. The company says it is developing an affordable door-to-door mobility service. Joining us now from Las Vegas is Thomas van der Aal, co-founder and CEO of VEI. Thomas, thanks for joining us. It's late, I know, where you are, so we will appreciate it. And you've been testing these vehicles now in Las Vegas. How pivotal is this moment then for your business? How significant is it?
Morning, everyone. Yeah, it's been a fantastic couple of days here in Las Vegas. It's been about 5 years that we've been developing this very new technology where a remote driver, which we call teledriver, remotely drives a vehicle. And after 5 years of development, we finally got it into the hand of customers with our very unique service, right? Where you download the VEI app, you click a button, and then an electric vehicle shows up in front of your doors with no person inside, because this person, sits afar and remotely drives that vehicle. Then the user gets inside. The user drives to the destination, whether it's the airport or in front of his or her office, and then just gets out and doesn't have to park, because at that point another teledriver comes in and parks the car for the customer. So that creates the most affordable door-to-door mobility service. We were just very excited that after all these years of development and 150 people working on this, finally we got it into the hands of the customers.
Yeah, indeed. And Thomas, look, it's a very different proposition, of course, to robo-taxis, the Waymos, the Cruises of the world, even potentially the Teslas as well. And you've talked about the fact that robo-taxis are complicated, is expensive. The technology hasn't performed as some had expected, and that is why you think your business model will work. What conversations, Thomas, are you having with regulators? How much enthusiasm is there from regulators to approve this kind of technology on their streets and in their cities?
Yeah, first of all, you're spot on. So what you're seeing here is not autonomous driving, right? So this is remote driving. It's a complete new technology that can really turn upside down so many different industries, right? Whether it's mobility services like ours or trucks or vans. So that's why we're very excited to bring this out into the world. Also, the value proposition, as you said, is very different from, robo-taxis or ride-hailing, because the customer drives him or herself, and that leads to, different benefits for the customer, such as, most importantly, lower costs, so we can be much more cost-effective compared to ride-hailing, or if robo-taxis evolve, also robo-taxis. To your question with respect to regulatory parts, a human is always in control, right? So that's the big difference. So we don't have to, validate or drive millions of kilometers to show and validate that our system works with things we might have not seen before. So that is very difficult for robotaxi or computer. That's why they have to do all these, validation kilometers. In our technology, the human always decides what to do. We had actually, during the CS, we had some very difficult maneuvers with construction sites, people closing down lanes, and a human had to make the decisions to, take a detour or do very, very fast decisions. And that's the big difference from our technology that also customers, but also regulatory bodies really like, right? And that's why we see now a lot of support for our technology, also in Europe, by the way, right? So I know we're back here in the US, where I spent many years before, but we also see on the regulatory front in Europe a very big support now coming for this technology, because they also see the benefits of this technology, and when it comes to safety and technology, right? But also for all the different commercial applications that I mentioned.
So, Thomas, what is the rollout plan then? By the end of 2024, what's it going to look like? Which jurisdictions, which cities do you expect to be operating in?
So, yeah, we're going to start here in Las Vegas. Our goal is, to start here in Q1 with a low double-digit number of vehicles, and then as the year progresses, roll out more vehicles and more teledrivers and increase the geofence. Today, we're available actually in downtown Las Vegas as well as at the University District. So we'll actually start with these two areas here, which already cover quite some parts of Las Vegas, and we'll roll all of these over the upcoming year. In parallel, as I mentioned, I think there's some very exciting things on the horizons when it comes to regulatory progress, as well as additional cases, as I mentioned, to potentially start looking into adding this into all private cars, for example.
Okay.
We get a lot of interest of this technology to add remote driving technology. Imagine, in 3 to 5 years, even if you might have your own car, where you can just click a button and, you don't have to park your own car anymore because you can have a driver on demand, a remote driver on demand, who, maybe parks the car for you when you get to the soccer stadium, and then maybe you have a few glasses of beer to drink, and then also the remote driver drives you back in your own car after the soccer stadium or after the soccer game. So these are all possibilities, that are there.
Yeah. And Thomas, the last time I checked, you'd raised, about $110 million from the likes of Kinnevik and Coatue. Talk to us about fundraising, and also how much pressure you're under from your investors in this environment of higher interest rate costs or higher interest rates. The cost of capital, of course, is higher, to ensure that you actually are able to monetize this and make it profitable.
Yeah, for sure. As I think we all know, the environment has changed quite a bit. We're in a very lucky position, as you pointed out, that we've raised over $100 million in funding. And for us right now, this is the year of commercialization, right? So we've built this very unique and, leading technology, and we are really focusing on building out now the commercialization of our business. That's why we're now here also in Las Vegas, getting this into customers' hands. Obviously, that's also very important for us as a team and our customers, but also for our investors to now really focus on the commercialization. I believe we're in a very, very good spot because this technology is very unique at this point in the world, and you can see all these applications. But for sure, making sure that through our own B2C service as well as through partnerships, we're able to show the commercial benefits of this technology is top of our mind. Also, you mentioned the interest rates. Obviously, adding this to our fleet now and rolling out that service, a very good thing, maybe interesting to say, right? Over robotaxis, our technology is camera-based, right? So it doesn't cost much. So we use normally homologated electric vehicles. So there's means for financing of these vehicles, and our system that we add to that vehicle, unlike robotaxis, which can cost 6 figures, is camera-based. So it can be in the thousands, and in the near future in the hundreds. Hence, you don't need as much financing as maybe robotaxi companies.
Thomas, we've run out of time, but really interesting. We'll continue to watch this story and see how it evolves, of course, for you and the team at VEY. Thank you for the update. Thomas van der Wouw, of course, the co-founder and CEO of VEY, joining us out of Vegas. Thank you. Up next, Ron DeSantis drops out of the 2024 US presidential race and endorses front-runner Donald Trump. We look at what it means for the race for the White House. This is Bloomberg.
Was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and any given day it would be the head of a studio, and just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it, because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
This is Markets Today. We're about 45 minutes into the European trading day. The green on the screen sustains despite perhaps a little bit of expectation that it wouldn't, that futures were a little bit optimistic, and yet here we are. You are seeing it across a lot of the indexes, not just in the stock 600 as well, but how much of that is going to be at the whim of the geopolitics when it comes to the U.S. election, the geopolitics in the Red Sea, and not to mention what you're seeing in Germany as well. That's where I want to go next. Hundreds and thousands of protesters have taken to the streets in Germany over the weekend, rallying against the rise in far-right extremism and the popularity of the anti-immigrant party, the AfD. To discuss, let's go to Bloomberg's Oliver Crook, who joins us live from Berlin. Ollie, talk us through the root of these protests.
Yeah, so there are a couple of parts here that all come together. And as you saw from those pictures, I mean, we're talking about literally hundreds of thousands of people taking to the streets over the weekend. This is an intensely personal and emotional and, severe issue here in Germany. And what the spark for this was this meeting that happened back in November. It was reported a couple of weeks ago in which members of the AfD, but also the CDU, allegedly attended these meetings where these plans were discussed of re-migrating people out of Germany. So what do they mean by that? They mean, yes, deporting illegal immigrants from Germany, but also getting people who have legal immigration status in Germany out of Germany, and even people who have German citizenship who have not, quote unquote, assimilated sufficiently, getting them out. We should say that the AfD has stepped back from this sort of plan as part of their sort of platform or anything like that. There was one person who attended there who was a senior advisor to one of the co-founders who has since stepped down. But for many Germans, this is an echo of the darkest period in German history of National Socialism. And so they took to the streets. And part of the reason that you have the spark, but also the powder keg, it's because the AfD is so popular right now. They're enjoying the highest that they've ever had in the polls, 23%. That makes them the second biggest, most popular party here in Germany. And for many people in Germany, there is no business for a right-wing party of this kind in mainstream politics. And so that's sort of what is at the center of these protests. What these protests actually achieve is a lot less clear, right? Because you can't really convince people who are already aware of this taboo and voting for the AfD anyway to step away from this. There are some people in Germany that would like to see the AfD banned as a political party, which there's a provision for in the German constitution, but it needs to be a threat to democracy. And you can't just ban parties if you don't like what they're saying. So that is really at the heart of a pressure that is building right now within German society.
Ollie, what has the pull been then for the AfD? Is it the economics, or is it immigration, or a combination of both?
So I think it's a combination of both, and then there's a third. So let's deal first with the immigration question, right? So this is something that even Schultz and Habeck and all of the people in mainstream politics have acknowledged is an issue, the illegal immigration, getting people deported more quickly. They vowed to do so, but they still have a paper-based system on a lot of this stuff. So that shows you sort of how difficult it is. There's the economic question. Obviously, we've been talking about how Germany's been flatlining for over a year and is expected to continue to do so. And so when people feel that they're sort of at risk and they've had to make these tough cuts on the budget, why are you cutting diesel subsidies and then giving money to non-German people in the form of immigration? That is what the argument's going to be. But then the third is really, I think, a protest vote and really a sort of disenchantment with establishment politics in Germany. I mean, I was in the protest last week with the farmers talking to people. They weren't all going around, holding up AfD signs, but they were really discussing a disenchantment with mainstream politics in Germany, not really hearing their story. And for the mainstream in Germany, they've ignored the AfD for a long time. They come out every now and then and sort of chastise them. But with 23% of the vote and state elections in September, they can't ignore them.
A really interesting dynamic. We'll see how much pressure actually builds. Bloomberg's Oliver Crook in Berlin walking us through that story. We thank you, as always, for your reporting. I want to stick with the topic of political risk. We go from Germany to the United States. Ron DeSantis has dropped out of the race to be the next U.S. president, endorsing the front-runner, former President Donald Trump. Now, the departure of the Florida governor leaves Nikki Haley as the only major rival to the former president for the Republican nomination. There's a lot to get through there. Bloomberg's Bill Ferries is all over it and joins us this morning. Bill, talk to us then about the odds of this GOP nomination. Is it basically a foregone conclusion that President Trump is going to be the winner?
Well, he's certainly in a strong position, and he's right where his campaign would like him to be, with Ron DeSantis bowing out, leaving this really just a two-person race heading into New Hampshire this week, but a two-person race in which former President Trump has a double-digit lead. So for it not to be a foregone conclusion at this point, I think Nikki Haley needs to exceed some expectations. She would ideally try to come within single digits of Trump in this New Hampshire primary. That would give her a little bit of momentum heading to her home state of South Carolina about 4 weeks from now. It would also give her a reason to talk to a lot of her donors about why she is still a viable candidate. There's a lot of ifs there. Most of the DeSantis supporters say that they prefer former President Trump over Nikki Haley, but Nikki Haley has a lot of things still in her favor with this primary.
Bloomberg's Bill Ferries there. We thank you for bringing us that crucial context. And of course, we are going to be watching the polling numbers going very, very closely into the next 24 hours. Coming up on the program, skepticism over Chinese assets expanding beyond the stock market. Investors expecting the yuan and bonds to underperform. We discuss that next with Bloomberg's M Live's Ben Ram. Stick with us. This is Bloomberg.
Expensive cities have a lot going for them. But if you live in one, you've probably noticed that these big, expensive cities keep getting more, well, expensive. You could always move away. You might have just started working remotely, so there's really nothing keeping you there. But then again, moving is a hassle. Well, what if someone paid you 10 grand to do it? What if they threw in free office space, a bicycle, or a gym membership? Programs in cities and states around the US are doing exactly that, and they're getting a lot of interest.
We've had over 50,000 applications.
About 90,000 applications.
We've had over 1,800 applicants from all over North America.
So are these nascent programs actually beneficial to their communities and the workers joining them? Or are they little more than flashy advertising campaigns for places looking for an injection of fresh talent?
Was going to keep Green World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Markets Day, 52 minutes into the European trading day. You're still seeing gains across the European benchmark of 0.6%. Let's get more analysis now as to what is happening across these markets and bring in Ven Ram from our MLive team. And Ven, we start with the question of the significantly looser financial conditions and how that could derail some of these bets around the Fed and just how aggressive they might be and just when they may indeed cut. Talk to us about your thinking, where you land on this debate, Ven.
Morning, Tom. Absolutely. I mean, in terms of financial conditions, we are now at the loosest financial conditions since around the time the Fed started raising rates last year. At the moment, the markets are behaving as though the Fed has already cut rates by more than 100 basis points. Definitely, if you look at the NASDAQ earnings yield, it's offering about 3.2%. And that juxtaposes with the Fed, with the 10-year yield of 4%. Which is risk-free, of course. So the markets are saying, you know what, the growth trajectory in NASDAQ is going to be pretty good. There is no doubt about that, but I don't think you can trade at an earnings yield of 3.2% when the Fed funds rate is at 5.50. So, you know, the markets are already behaving as though the Fed has already cut rates significantly and deeply. That is obviously not the case. The markets have front-run what's happening with the Fed. And I think that, you know, the most important takeaway from all this is that the markets are doing the job for the Fed, and they are loosened the looser financial conditions kind of suggest that the Fed doesn't have to do that work anymore, at least as rapidly as the market thinks they need to do it. I mean, we heard from Fed's Daly last week on Friday saying that, look, we don't want a rollback of inflation. We don't want inflation coming back higher. So I don't think the markets are front-running it. I think they're barking up the wrong tree here.
Well, it's interesting that we talk about this kind of foregone conclusion that there will be rate cuts in 2024. To your point, 6 to 7 priced in for the Fed and a few priced in for the ECB as well. But I'm curious about the positioning story, because if you look at hedge funds, for example, they've actually extended their shorts on treasuries at a time when everyone is saying this might be another leg of the bond bull market. Then if hedge funds, if the smart money get that call wrong, how much of a pain trade do we see in the treasury market?
I think the pain trade is going to continue, especially at the front end of the curve, because, you know, the markets are kind of too rich in relation to where the Fed is going to be. I think that the markets have kind of overpriced the Fed loosening to come. I think that the Fed is probably not going to loosen rates as much as they are expecting it to. So I think that that correction has got a bit longer to go. And I think as far as the hedge fund positioning goes, I think, Kriti, the point is that alpha is going to be what is going to drive returns this year, and that alpha is going to be extremely hard to find in these markets.
Ben, meanwhile, it's another day where, wow, what is happening in China is quite eye-catching. Even as we see these daily downsides coming through for Chinese stocks, now the Hang Seng China Enterprises Index getting back to levels we last saw in 2005. Ben, is there anything that's going to stop this downslide, or is it just looking so cheap now, maybe the money starts to flow in?
It is too cheap, but I think, you know, people are going to be hesitant to touch that with the barge pole because, you know, the optics definitely don't look good. As you said, it's the lowest in so many years. But, you know, what is ailing China's markets is what is really ailing the Chinese economy. And until the Chinese economy rights itself or is put right by policymakers, it's not going to turn around in a hurry because, you know, what is happening in the stock market is just discounting what is happening in the real economy. And I think the policymakers have the work cut out. Domestic demand is weak, so they need to look for overseas demand, which means we can, sorry.
Yeah, we'll have to see if that divergence you start to see from the central banks, how much havoc does actually wreak. Ven Ram from our Markets Live team, we thank you so much for your analysis this morning. That does it for Tom and I. The Pulse with Francine Lacqua is next. Stick with us. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. The rally in global equities that pushed the S&P 500 to a record high continues. This week, investors set their sights on the ECB, the Bank of Japan, and, of course, U.S. GDP data. A major boost for Donald Trump as Ron DeSantis bows out of the U.S. presidential race, saying he sees no path for victory. The spotlight is now on tomorrow's New Hampshire primary. Plus, Sony calls off a $10 billion merger with India's Z Entertainment. The deal would have created a media giant with the financial muscle to take on Netflix and Amazon. So good morning, everyone. Let's take a look at the European markets map. Of course, a lot going on in some of these markets. Yeah, it's very clear that the S&P 500, since hitting a low in October 2022, has surged some 35% and has topped that over the last couple of days. Now, what we're looking at is actually European stocks, but also Asian stocks a little bit earlier on, extending the rally in global equities. Once again, that pushed the S&P to a record high on Friday. So you see the FTSE gaining some 0.2%, the CAC 40, one of the biggest gainers in the European market session, actually gaining 0.7%. So we go to politics, and Ron DeSantis has dropped out of the race to be the next U.S. president, endorsing frontrunner Donald Trump. Now, the departure of the Florida governor leaves Nikki Haley as the only major rival to the former president for the Republican nomination.
I am today suspending my campaign. I'm proud to have delivered on 100% of my promises, and I will not stop now. It's clear to me that a majority of Republican primary voters want to give Donald Trump another chance. I signed a pledge to support the Republican nominee, and I will honor that pledge. He has my endorsement because we can't go back to the old Republican guard of yesteryear.
Well, for more, I'm joined by Bloomberg's Bill Ferry. So, Bill, this was pretty extraordinary. What does DeSantis' endorsement of Trump actually mean for Nikki Haley's campaign?
Well, it's going to be very interesting to see how much of a slice of those DeSantis voters Nikki Haley can peel off. We know from polls that were done before this announcement that many of those DeSantis supporters viewed Donald Trump as their number 2 choice. So I suspect he'll get the majority of them, but that Nikki Haley will get some. It is, as you said, basically a 2-person race at this point between Donald Trump and Nikki Haley, and it's critical for her to try to get some momentum coming out of New Hampshire, heading into the next big primary race, which will be almost a month from now in her home state of South Carolina. But she needs a good showing this week to get all the way there.
Bill, I keep on being told that actually New Hampshire is a little bit different because it's almost like, because it's a purple state, it's a little bit like a national election reflection. It's not really what the Republicans would vote for.
Yeah, well, the very interesting thing about New Hampshire is that in the Republican primary, they allow people who are not registered Republicans, people who are either unaffiliated or independent voters to take part in the primary. So Nikki Haley has, among other things, been trying to reach out to those folks and try to get them to turn out on Tuesday. That gives her a little more reach with kind of moderate independent voters. Whether that's going to be enough to close the gap with Trump remains to be seen. She really wants to come out of this ideally with a second place finish in the single digits or the low double digits. There are some polls showing her as much as 18 points behind. That's not going to be a great showing for her trying to sustain her campaign for another month.
All right, Bill, thanks so much. Bill Ferry's there with the very latest on the U.S. presidential election. Now let's get some market insight with our guest. Joining us now, Hannah Smith, Vice President for ETFs at State Street Global Advisors. Hannah, always good to speak to you. Thank you so much for coming on. If you look at the markets, they don't have a care in the world. If you look at the S&P, it's at a record high, and European markets are following. What do you worry about? Is it policy or actually politics changing the root of economics?
Well, firstly, good morning, Francine. Great to see you. Yeah, as you mentioned, the markets have been sort of going along blissfully in respect to some of the geopolitical risks and other things that we've seen within the markets. But I think if you actually look under the hood, there hasn't been a huge amount of momentum. The S&P is up 1.5% since the beginning of the year. But if you compare that to the end of last year, where it was up 16% in the last couple of months, it hasn't really moved that significantly. And all of the drivers are the big tech names as well. So I think there is still quite a lot of caution off the back of some stronger than expected US inflation numbers, and also I guess mixed with some of the stronger consumer data coming out of the US as well. So it's sort of mixed data, but the market is moving still quite close to sort of benchmark.
So Hannah, if you look, I guess, at the driver going forward, is it 100% earnings, given all the fluctuations that we've had so far? Is given this kind of economic, trend, whether the corporates are strong enough to withhold them?
Yeah, I think earnings is definitely going to be one to watch going forward. And I think what we've seen is that whilst the market has really taken on board some of those lower inflation numbers, the consumer really still remains strong, as does the labour market. So I think this is a real dynamic that needs to be watched carefully in terms of indicating when rate cuts or the path and the rapidness at which we see rate cuts. So I think the markets is really holding on to some of that positive data and obviously factoring in expectations of a soft landing, but it's still very much market and data dependent.
Do you worry that actually even if we get cuts from the Fed, all of the good news has already been priced in?
I think that is a big concern, honestly. If you look at S&P being at highs not seen since January 2022, the market's really been quite optimistic. And so I think, yes, a lot of good news has been priced in. But interestingly, if we look at investors, there still is quite a lot invested in cash, so on the sidelines, which still could be put to work within the markets. And also a lot of the equities where we've seen inflows have been into the more defensive sectors. So whilst the markets have moved quite positively, if you dissect that a little bit deeper, there is still some caution within investors' minds.
So how do you basically, what do you buy right now? Is US still, the main thing to look at?
Yes, exactly, definitely. I think I've been quite consistent in wanting to stay defensive within equities. So the US, large caps, really those are the companies that if we do enter a recessionary environment, even though it's not the base case, there still obviously is quite a lot of data that is dependent. We're data dependent in terms of rate cuts and where to go from here. So I think staying US, large cap, also defensives, healthcare, and tech as well, which is a no-brainer given the current environment and what we've seen tech do last year and year to date.
So you also have a really interesting China call because you're tactically overweight China.
Yes, exactly. I knew you were going to ask me about that. So yeah, China, as we've seen, China has been extremely challenged and there's not a lot of strong momentum around China. But if we actually look at how China's traded, it's really been punished by the markets. And we think a certain extent of that is overdone. And given the more risk-on sentiment that we've seen coming into 2022, 2024, we think it could be an interesting entry point. Now, that doesn't detract from a lot of the concerns around China, but if you look at it from a valuation perspective, it really does look like it's overdone, and it's sold off 16% year to date. So that's quite significant. And I think for investors who are willing to take a little bit more risk, it could be a bumpy ride, but this could be an attractive entry point.
So how are you expecting China to, it's quite difficult to see exactly how they reopen and what they do with the property market. So is this more like a 12-month, 24-month play?
Yeah, exactly. I think it's a longer-term play, and it's really quite tactical in the sense that it is very undervalued at the moment. And as I mentioned, there are going to be bumps along the road, and obviously we're watching closely what policymakers do within the region. But for investors who do have the risk appetite, I don't think it's one that can be overlooked in terms of how significantly it has sold off and some of those valuations. On the debt side, it's trading at within the 60th percentile. So it hasn't been cheap a significant amount of time, more than what we're seeing now.
All right, Hannah, thanks so much. Hannah Smith from State Street Global Advisors stays with us. We'll also talk a little bit about Europe and maybe delve into some of the smaller caps. Coming up, Germans take to the streets to protest far-right extremism and the rise of the anti-immigrant AfD party. We'll have more on that live next from Berlin, and this is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to The Pulse. I'm Francine Lacqua here in London. Now, still with us, Hannah Smith, Vice President for ETFs at State Street Global Advisors. Now, Hannah had this pretty amazing call, actually, being tactical overweight to China, which, of course, caught my eye. But actually, all of your calls catch my eye because I know you're also, for example, you prefer the large cap versus the small caps. I just wonder whether there's an effect at some point where we start, questioning, for example, valuations of the Magic 7.
Yeah, I think it's an interesting point, and the reason that we prefer large caps is because of the concerns around, are we going to have a soft landing versus a hard landing? As we are moving now into the soft landing camp, I think that does give support to small caps, and it means that some of the pressures that were exerted on them before are less prevalent in an environment where we go into a soft landing. So I think it's definitely large caps at the moment, but as we do enter into this soft landing environment, that could provide an opportunity for small caps.
Hannah, what do you do with Europe?
Yeah, Europe's an interesting one. I think if we look at it from an investment perspective, it's very cyclical. And as I've mentioned, defensive is really where we want to be when there could be bumps along the road. So I think Europe has a lot of headwinds at the moment. In particular, Germany is looking quite weak. It's relied heavily on China. China's becoming more self-sufficient. So I think Europe is one to avoid for the time being.
At some point, does it look like a good valuation, or does it still have a lot further to fall?
I think it's one to watch. I think at the moment it's not looking overly attractive, but as we see what happens in regards to this soft landing, in inflation numbers as well, it could be a point at which we reassess and say it could start to look more interesting. But at the moment, that's not the case.
Hannah, you also have a great breakdown looking at sectors, saying like, look, you prefer tech and healthcare sectors, again, as a recession hedge.
Exactly, yes. So yeah, healthcare is really well positioned. It's a defensive sector. It also has very high cash as well, so that's positive for it. I mean, it's very under-owned and people are underweight it. So we feel that it's well positioned, and we think that there's going to be positive earnings coming out from healthcare as well. And then we barbell that alongside tech, which is obviously more cyclical, but it has huge cash piles, which means that rising interest rates are actually positive for them. So we also like tech as well, and obviously the earnings have been phenomenal for tech as well. So we think a combination of the two is a good sort of hedge for investors.
And I also want to get your take on fixed income.
Yes.
First, let's listen into what Christine Lagarde told us last Wednesday before she was in a quiet period.
I would say it's likely too, but I have to be reserved because we are also saying that we are data dependent and that there is still a level of uncertainty and some indicators that are not anchored at the level where we would like to see them.
So this was Christine Lagarde actually pushing back against some of the market expectations of increase or of rate cuts. I mean, what's happening in the market? They seem to be wanting those cuts so much that sometimes everything's priced in, and I don't know whether it forces policymakers to do something or whether it's markets that will end up being disappointed.
Yeah, I think it's a really good observation, and what we really see is whenever there is data which supports a rate cut narrative, the market really gets ahead of itself. Yeah. And so then it's at times like now when we've seen the performance of the S&P, it's up 1.5% year to date. There's not really much further for it to go since it closed at record highs. We're now experiencing even more highs. So some investors are looking and thinking, oh, the market's not doing too much, but it's actually a lot of it's already been priced in. So I think it's a delicate balance between the market obviously being supportive when we do have positive data coming out, but not getting carried away with itself.
So we've been focusing so much on geopolitics,
yes,
and actually the fact that there are so many crises, we're on the brink on so many places. And then I have a big investor that messaged me yesterday saying, actually, I think it's the biggest concern is a monetary policy mistake. Mm-hmm. I mean, is it really, or is it just geopolitics that we don't really know what kind of economy we'll be dealing with, and so it's very difficult for monetary policy to know what to do?
Yeah, it's a great question, and I think this is where we have seen many of the central banks come out and really push back on this narrative that we're going to see these huge rate cuts coming into 2024, because it's also their job to sort of temper the sentiment around how many rate cuts we're expecting. But it's an interesting point about geopolitics, because we haven't really seen the market react off the back of the multiple shocks that we've seen year to date. We do think that might change, and it's very hard to ignore some of the significant conflicts that we have at the moment and the impact that those have in the market.
Thank you so much, Hannah, as always, for joining us. Hannah Smith there, Vice President for ETFs at State Street Global Advisors. Now, hundreds and thousands of protesters have also taken to the streets in Germany over the weekend, rallying against the rise in far-right extremism and popularity of the anti-immigrant party, the AfD. Now, to discuss all of this, let's also go to Bloomberg's Oliver Crook, who's live in Berlin. So, Ollie, what's at the root of the protests, and what's the wider context of them set within German politics right now?
Yeah, exactly. There's a sort of spark, and then there's the powder keg. And the spark is in the form of this meeting that we understand took place in November. It was reported on just 2 weeks ago, which senior members of the AfD, but also members of the CDU attended, where there was this sort of plan about remigrating millions of people out of Germany. What does remigrating mean? So there's the deportation of illegal immigrants as one part of it, but also talking about people with immigrant status in Germany, and even those who are German citizens who have an immigrant background that have not, quote unquote, assimilated sufficiently to get them basically to leave Germany. And so this obviously brings the echoes of one of the darkest periods in German history. And so for many people in Germany, a party like the AfD has no place in mainstream politics. So they took to the streets. And the reason that it is so urgent now is because the AfD is at 23% of the polls. It is the second most popular party here in Germany. We should say that the AfD has sort of stepped back from the language around this remigration controversy, and one of the advisors to the co-founder who attended the meeting has stepped down. But still, for Germans, many of them, there is no place for the AfD in mainstream politics. The issue is this: what does the protest actually achieve? Yes, it sends a strong signal. Many people in Germany would like to see the AfD banned as a party, but of course, and there is a provision in the German constitution to ban parties if they're a threat to democracy, but you can't ban parties just because you don't like what they're saying. And of course, the AfD would say that that is undemocratic, and of course, it would be. So this is really at the center of a tension that is really boiling up within Germany that we're going to see play out over the next few months ahead of September state elections, where the AfD is expected to sweep all three of the elections.
Ollie, thanks so much. Oliver Crook there with the very latest from Germany, and we'll have, of course, plenty more throughout the day. Now, coming up, the Israeli Prime Minister Benjamin Netanyahu under mounting international pressure for rejecting Palestinian rule of Gaza after the war. We have the details, and this is Bloomberg.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Israel's Prime Minister Benjamin Netanyahu has rejected what he calls unacceptable terms presented by Hamas for a new hostage deal. That comes as the Israeli leader faces increasing pressure at home and abroad over his handling of the war with Hamas. Now let's get the latest with Bloomberg's Mark Champion, our international affairs columnist. So, Mark, over the weekend, President Biden spoke to Prime Minister Netanyahu for the first time in almost 4 weeks. What is the current state of the Israel-U.S. discussions over Gaza?
Well, I mean, you'd have to say they're in trouble. Essentially, when Netanyahu was in Washington, he made very clear that he and the U.S. administration disagree on what should happen in Gaza now, and more specifically, what should happen after hostilities wind down. He made it very clear that he's not interested in any kind of Palestinian state, and that he is, willing to see, thinks that it's required that Israel should remain security control over the Palestinian territories, essentially, which would essentially mean military occupation. So there's a wide difference now between the U.S. and Israel on how to handle this crisis, and that's going to play out over the coming days and weeks.
So, Mark, what are some of the pressures facing Netanyahu at home, but also abroad? It seems the tide is turning.
Yes, so at home, on the one hand, he's correct that most Israelis really have no patience to talk about a two-state solution for, the Palestinians at the moment. But on the other hand, there is rising pressure to do something to get the hostages back and to end the war. So there is, you had someone from within his cabinet, very respected general called Eisenkot, who, last week gave an interview in which he said, we're not winning in Gaza. Victory means the elimination of Hamas, and that if anyone who says that is lying to the public, which is pretty tough language, and that is exactly what Netanyahu is saying, is that we need to continue this till victory, we can do it, and that is compatible with getting the hostages back. In fact, he says it's the best way to get them back. The families of the hostages profoundly disagree and are now protesting, including outside his home, and saying that, we need to make a deal of some kind with Hamas. And that's where, the statement that he had over the weekend comes in, where he said, that the terms that Hamas is asking are unacceptable.
Mark, we've also had some comments from the White House on the use of a deterrent strategy in the Red Sea. So how is this campaign going?
Well, it's going as one could only have predicted. In essence, the U.S., is very good at finding targets, eliminating them. It has, the most sophisticated weapon systems in the world to do so. The difficulty always was going to be, and has been, in Iraq and Afghanistan and elsewhere, how do you really change the behavior and control what is, in essence, a guerrilla formation? They have mobile missile launchers and have said very clearly that they're not going to be impacted or dissuaded from their campaign against international shipping by being targeted. In fact, if anything, they seem to quite have invited this. So it's a difficult position for the U.S. The U.S. is saying, look, this is a wider policy of deterrence. It's not just directed at this particular moment, and you need to be patient.
Thank you so much, Mark Champion, there with the very latest on the Middle East.
was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios. And, any given day it would be the head of a studio and, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Bloomberg.
Well, the rally in global equities that pushed the S&P 500 to a record high continues. This week, investors set their sights on the ECB, the Bank of Japan, and U.S. GDP data. A major boost for Donald Trump as Ron DeSantis bows out of the U.S. presidential race, saying he sees no path for victory. Well, the spotlight is now on tomorrow's New Hampshire primary. Plus, Sony calls off a $10 billion merger with India's Z Entertainment. The deal would have created a media giant with the financial muscle to take on Netflix and Amazon. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the Singapore Exchange is continuing in its efforts to increase the number of IPOs on the exchange. It will be hoping for a better year after a decline in 2023. Now, I'm pleased now to be joined by Loh Boon Chye, the Chief Executive Officer of the Singapore Exchange. Thank you so much for making the time of actually coming on air with us. First of all, sir, what are the kind of steps that you're putting in place to try and revive the IPO market for 2024?
We've done a number of things over the years. First of all, obviously boosting the research ecosystem, reaching out to the retail and institutional investors, and more importantly, the wider Southeast Asia markets. And we've created connectivity with some of the exchanges, such as Thailand. We've also linked up with the 2 Chinese exchanges in terms of ETF linkage. That's all to bring flows into Singapore to create a better ecosystem for companies looking to tap the capital markets.
So are you confident that actually you have a good pipeline? I know, some of the SPACs decided not to list in Singapore. I don't know whether they were worried about more market conditions than the actual place of where they would be listed.
Well, I think, first of all, we need a more conducive market conditions. It's not just about inflation, but let's not forget that rates are at a higher absolute level. At one level, it's interesting to look at the pipeline, but I think when market conditions are more conducive, even those companies that have not been on a pipeline, I think will be thinking hard to try and raise capital.
I think the Singapore Stock Exchange, of course, is competing with Hong Kong Stock Exchange to come up trumps, also looking for business away from Asia, but, for example, from the Middle East. Are you confident that, for example, secondary listing of Chinese firms will be part of your story in the future?
Well, for the Singapore Exchange Group, we are multi-asset marketplace, multi-asset platform. Not only do we have a stock market that caters to a company looking to raise capital, we now have a very broad, growing and significant derivatives business in equity, derivatives in currencies and commodities, and that really allows investors to access Asia through a very efficient single point of access.
Yeah, and looking at the numbers, some of the currency, but also some of the commodity derivatives are doing very well, quite well on your exchange. So how much growth are you expecting in those categories?
If you look at when we first started to financialize the iron ore contract as a proxy for global growth, the volumes have actually doubled in the last 4 years. More significantly, we now have many more financial players participating in the marketplace, and also liquidity is now almost round the clock into the New York session. We continue to see growth because we think Asia continues to lead Asia growth globally.
Globally, I mean, where do you see when you look at listings or some derivatives, where is that growth coming from? So are there certain sectors, for example, in IPOs, that you think will lead the way, and are there certain parts of the world in terms of currencies that you think will lead the way?
If you look at Southeast Asia, 10 years ago, we hardly had a few unicorns. Part of the IPO story is also supply. Today, Southeast Asia could boast of 80 to 100 unicorns, and when market conditions are more conducive, companies will come to the market, coupled with the fact that we do have a very effective single point of access into Asia that is continuing leading global growth. That allows participants to obviously trade the whole of Asia through the XGX group.
So who do you think right now is your biggest rival? I know you're trying to get business from the Hong Kong Stock Exchange. What about the LSE here in London? Has Brexit changed the appetite, I guess, for listing in the UK, and can you take advantage of that?
It's counterintuitive. As an exchange for the Singapore Exchange Group, we probably have more collaborations with many other exchanges, many other marketplaces than any other exchange group in the world. Our deposit receipt with Thailand, more will come with the other markets, connectivity to China. And I think exchanges are probably better by collaborating to create a bigger marketplace.
You must be in rivalry, though, right? I mean, if you look at London, do you think Brexit has changed London listings?
Well, London has historical significance, obviously strategic geographical location, coupled with enduring resilience. I'm sure that over time you will have a new model for economic growth, and London remains a very important capital markets.
Sir, Treasury income actually gave a big boost to your 2023 fiscal year earnings, right? Thanks to higher interest rates. What are you expecting for this year as interest rates go down?
We are a very diversified business model, so as rates normalize over the next 12 to 24 months, trading activity, I think in particular the stock market will probably increase, coupled with the fact that Asia continues to lead global growth. There will be flows, financial portfolio flows into Asia.
So you also have first half earnings next week. What should we be looking out for? Is there anything particularly exciting that's coming up?
Watch out for the result next week.
Can you give us, what are you most excited about over the next 12 months, 12 to 24 months? I know you're also here to muster business. You're here for, maybe changing technologies and things like that. But what personally are you most looking forward to?
The growth of Asia. I mean, Asia is complex, but it has got many countries. You have the economic powerhouses of China and India. You have the developed markets of Korea, Japan, Taiwan. And you also have the hidden gems of Southeast Asia. Southeast Asia by itself is half the size of the United States, but twice the number of people. So tremendous opportunities in Asia, and we're very optimistic around the growth in Asia.
There are a number of elections, of course, coming up, not least the U.S. election. Do we need to wait post-U.S. election to have, I guess, more certain valuations? Or when you look at the market uncertainty, will it be easier post-November?
Well, I think geopolitics is clearly, and elections is one of the consideration, one of the factors. But for an investor, they need to allocate. And I think in a diversified portfolio, you have to just price that in. Okay,
thank you so much for joining us. That was a great conversation. The Chief Executive Officer there of the Singapore Exchange, Loh Boon Chye, joining us this morning. Now, coming up, we're joined by the Chief Executive of Edelman to discuss their latest trust barometer. The conversation with Richard Edelman is coming up next, and this is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
The 2024 nominating contests are here, and the candidates are making their cases to New Hampshire voters ahead of the primary.
And we're off to New Hampshire.
Bloomberg is live on the ground, bringing you the fastest news,
Trump is leading by a long shot,
insightful interviews,
these candidates are trying to target independent voters,
and the most informative analysis about what it all means for November's presidential election.
What is your path to the nomination?
Coverage continues today, only on Bloomberg.
So rapid innovation is fueling distrust. That's one of the top lines from the latest Edelman Trust Barometer. The 2024 report says society's ability to process and accept rapid change is under pressure. And when it comes to the biggest innovation of our time, AI, initial findings show that most people will resist its use if they believe the change is being managed badly. Well, let's discuss all of this with Richard Edelman, the chief executive of Edelman. Richard, so good to have you here in the studio. I know we both survived Davos, just about.
We're here.
And that was also talking about trust, but mainly between, politicians, corporates, and actually citizens. AI changes everything.
So if you walk down the promenade in Davos, you saw company after company promoting AI. And the instinct is to say, oh, it's the savior. And of course we want economic growth, Francine, because growth drives trust. And the developing countries have higher trust levels than developed because they have higher growth rates. And so AI should fuel growth. The problem is, by 2 to 1, people think that it's being badly managed and that it's being forced and rushed and not particularly well regulated, and they don't understand what the benefits are to them, and they're not quite sure what it means for employment.
But so what are your worries about AI? Is it that we're going too quickly and that it could actually put up some forces of evil in it because we don't know the end use, or does it lead to job losses?
It's job losses, but it's also, we have 50 elections this year, and who knows what it does for the democratic process in terms of disinformation. And we have to be quite sure that people get accurate facts in order to make the right judgment on the candidates.
Yeah. What I thought actually was really lacking in a lot of the conversations on AI is that it also touches a percentage of the population, and it probably widens the gap between the haves and the have-not when it comes to AI adaptation.
Well, interestingly, across gender, across countries, across education levels, income levels, everybody is nervous about AI. But in the U.S., you already see this mass class divide about AI, 20 points delta between the high and the low. And between Republicans and Democrats, shockingly, not just for AI, but for EVs, for green hydrogen, like this, it's 40 points difference between Republicans and Democrats on willingness to accept, because they feel maybe that government's forcing it, like EV subsidies, for instance. They don't want that.
Let's also talk. I want to continue talking about trust in your trust barometer. But there's New Hampshire. This is a big deal, especially because Ron DeSantis not only dropped out, but also supported Donald Trump. I mean, is there anyone that will stand up to Donald Trump?
Well, so Nikki Haley's giving it her best shot, and I think the polls show that Trump's still winning by 15 points, and so it looks as if it'll be a Biden-Trump outcome for the election.
I mean, New Hampshire, and you know New Hampshire, quite well.
Yeah, I went
Is
to
it a
prep
little
school
bit-
there.
Yeah, so it's a little bit different to other caucuses because it's actually, because of the people that can vote in it, it's more of almost like a general election. So it gives you a blueprint, not of what the Republican want, but what the wider American citizens would vote for.
Well, yeah, because, you can be a Democrat, you can be an independent and vote in the Republican primary. So, yeah, it's a better sort of view of what might happen in November. And it looked as if Haley was really closing the gap, but now it seems to be widening again.
Richard, in the last, trust barometer, I think there was a lot of concerns that actually people didn't connect with politicians and definitely did not connect with chief executives. I mean, is that trust being rebuilt slowly, or is there just a fracture in society that will take years, if not decades?
So I think that the pandemic really had a negative effect on all establishment spokespeople, whether you're a CEO, government leader, journalist, even academic, because the idea somehow that science and society have been divided is a big problem. And so a person like me is now as trusted or more trusted by someone who's skeptical of innovation than a scientist.
So how do you rebuild that trust? I mean, it seems like a bit of a nightmare, frankly.
Well, I think scientists have to acknowledge when there's a change in the science. I think we also have to have a more measured pace of adopting these innovations. We can't be seen as forcing them. And we also better consider the side effects, that if, in fact, AI is going to be implemented in the financial services industry, what are we going to do with the insurance adjusters or other people who might lose their jobs?
I mean, on geopolitics and certainly with Israel, Hamas, and other things, the silence is deafening from chief executives. Is it just because it's impossible to weigh in, or?
I think the smart move for CEOs about Israel-Palestine is to express humanity and to say that we mourn the losses of life on both sides, that the action by Hamas was genocide with clarity, but that 23,000 people have been killed in Gaza in the aftermath, and that you have feeling for them as well, and that you want people to live in peace, but essential for the employees that they not feel that you get into politics.
There's something pretty incredible when you look at the trust index, is actually you also have a breakdown of developing countries, actually all countries, but it's developing countries that lead on trust. I mean, the difference also between the 2023 and 2024, basically trust barometer, I mean, it always has, what's the main difference that you see between the countries that are coming out Trumps? I mean, if you have an autocracy, then people believe you more.
Yeah, well, it's a sadness that not a single G7 country is in the high level of trust. And we now have, the autocracies. And why? Well, because they have better economic performance. But we saw the first sign of kind of dissent out of China, which is that 2/3 of people said the government has too much influence on science. That's a big kind of watch out, because the Chinese are not happy with what the result was in COVID.
And Richard, when you look also, you have a section called institutions out of balance, and the fact that governments are seen as far less competent and ethical than business. I mean, does this go back to what you were saying at the beginning? Was it COVID and the lockdown, or is it just a cycle in elections that has happened over the last 300 years?
So we really have 4 logs on the populist fire. The first is the mass class divide in opinion. The second is the imbalance between business and government, where business is 50 points ahead of government on competence, 30 on ethics. And then the third is disinformation. And now the fourth is this fear of the pace of innovation. So the problem for government is it's seen as either paralyzed or incompetent, and neither is good. So government has to now show, for example, that it's able to achieve proper innovation, that it will support the kind of proper, structure of regulation, and that its leaders are willing to listen and be accountable.
But so if these established leaders are not listened to tell the truth, who's listened to?
Well, trust moves local. It's my CEO, interestingly. Trust moves into my company, which is why CEOs have to speak up. It's my company, my CEO, my company newsletter. And so if trust is local, then, the company has to have at least some point of view on most things. Now, I do believe that on diversity and inclusion, on sustainability, on geopolitics like Russia, Ukraine, And now on innovation, it's really important that a CEO lead the way.
And again, I mean, we're in a very uncertain year, economically, societal, kind of like concerns. What do you worry about the most?
I worry about instability. I worry about everything becoming political. There's an anti-DEI movement in the States. There's a whole kind of, things are really escalating out of Israel-Palestine. And so politics invading, consumer brands, which to me is unfortunate. Brands have, tried to be part of conversations, and God knows employees are looking to their own companies to be part of discussions, because the most credible and interesting part of our study is you discuss politics more in your company, because it's the safe place to do it, not in your own neighborhood.
I mean,
you can't go over the fence anymore to the neighbor.
Yeah, because I've heard actually, even on our road, some pretty big fights. Was Davos useful to you?
Davos was hugely useful for me. I learned a few things. One, that trade instead of east-west is going to be north-south.
Yeah.
Two, I had a real sense of the deep commitment to AI across the board, not from just Microsoft, Google, et cetera, but from companies implementing it in healthcare, et cetera. And I think, third, I really had an idea that companies are really struggling to find their way in society, but they are committed to a better place.
All right, Richard, thank you so much. Always a good idea to speak to Richard Edelman, the chief executive there of Edelman. Coming up, it was supposed to be a rival to Netflix. Instead, Sony has pulled the plug on a $10 billion merger. So we have the details on what went wrong next, and this is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
connection lost.
Now, it would have created a media giant with the financial muscle to rival Netflix and Amazon. Instead, after 2 years of negotiations, Sony is terminating its $10 billion merger with India's Zee Entertainment. Now, Sony says the conditions of the deal were not met and is now seeking $90 million in breakup fees, while Zee says it categorically denies the allegations. So let's bring in Bloomberg's Alex Webb. Alex, I mean, this is a huge deal. This was meant to be the game changer for the companies. So what went wrong?
So essentially, the CEO, who is also the son of the founder, was embroiled in a investigation from India's markets regulation to do with some borrowing, from some of the ways that money had been borrowed. He's not been found guilty of any of that, but for Sony, the reporting suggests they were concerned actually what the corporate governance fallout of this might be, and it seems to have been enough. They wanted the new entity, the merger of these two units, to not be led by him. Right. He clearly not willing to step down, and therefore it's falling apart. So
legally, what happens next?
Well, legally, they continue as independent companies. The struggle they have right now is that, as far as we know, though, I don't think there is an ongoing investigation into him. The struggle right now is, can these companies compete at the necessary scale, right? Because we've got Disney merging with Reliance, or selling, essentially. It's a local unit to Reliance. Reliance will control this 51% of this new entity. They're going to have massive scale. Of course, you've got Netflix and Amazon playing in this place, too. India is a market which has incredibly high price sensitivity, which means you do need a huge amount of scale in order to make these things, worthwhile and make them pay for themselves.
But so can they survive on their own? Would somebody else actually swoop up and try and buy them?
I mean, it's always possible. I think it's clear that Sony is trying to actually, it seems, expand its presence in this market. It was going to be the controlling entity here. It was going to have 51% of the new business. Zee, maybe therefore, is still therefore to play for. There are some other players in the market that might be options, but as yet, this seemed to have been the most attractive one, and it would have given Sony, at one fell swoop, something like 75 different stations and stuff in the region. So that would have been hugely compelling for them.
So I think there's a breakup clause where they can actually try and claw back like 90 million. I mean, do we know if this is going to get ugly between the two companies, or friendly, or do we just need to see how it plays out?
I think we have to see how it plays out. I don't see much reason for, surely the 90 million one assumes will be paid. That's going to have been poured over by lawyers in very great detail. They were in a real standoff. This has been something that's been going on for a little while. We first reported a couple of weeks ago that this was an issue. It was then reported by our colleagues in Asia just 2 weeks ago that actually looked like it was going to break up, and now we have actually seen that happen. Now, the fact that it took so long suggests there was a lot of back and forth. They were trying to find some sort of resolution. Yeah. Clearly, one was not reached.
Alex, thank you so much, as always, for joining us. Alex Webb there with the very latest on Zee and Sony. Coming up a little bit later, the PIMCO co-founder, Bill Gross, speaks exclusively to Bloomberg. That conversation, you won't want to miss it. It's at 8 p.m. here in London. Up next, Bloomberg Brief, with Danny Berger in London, Manus Cranny in New York, and this is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part
even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
Later got asked to be the head of USAID.
I got that job when I was 36 years old.
36 years old. You're running USAID. How many employees does it have?
We had 11,000.
And did you feel qualified to run something that big?
I did until, the work started.
DOJ or other authorities
could face bigger challenges next.
It was going to keep bringing World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
A very good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Wall Street's record rally, bets on a soft landing and AI boom push U.S. stocks to new record highs. The optimism may be fueled by more earnings as they roll in. Big tech and airlines set the agenda this week. And Ron DeSantis buys out of the U.S. presidential race, narrowing the Republican field to two major candidates, Donald Trump and Nikki Haley. A very good morning. Are you prepared to bet against, rage against the machine that is new record highs in equities on the S&P 500, on the NASDAQ as well? If you take out NVIDIA, you don't technically have a record. But what can you do? You cannot avoid but to sort of genuflect in front of NVIDIA. Danny will talk more about that later. Up 0.3%. We put 3% on the NASDAQ last week. We're now trading at 30 times earnings on the NASDAQ. Is that rich? Or is that tantalizing? That's the question we'll put to Mark Hayfley in just a moment. The leadership on this rally is quite broad. Energy is actually one of the biggest bulwarks of this record high. You wouldn't quite expect that, but we're seeing a breath come in from AMD, Broadcom, along with Merck. Now, the Magnificent Seven will deliver their earnings this week, Netflix, Tesla, and Intel. And the earnings there are expected to expand fourth quarter profit by 46%. Now, that takes us over to something which is polemic, which is China stocks in Hong Kong, battered, bruised at a 22-year low. It could not be more manifest between the United States of America and those of China. Do you believe in the stimulus story in China? Fund managers are cutting their allocation, and UBS say you're going to need punchier policies to revive Chinese stocks. That is pretty brutal. That is the close in Hong Kong. Danny, good morning.
Good morning, Manus. Yeah, it seems like everyone has decided that if you were to buy China, it's just catching the falling knife. Well, it's been a tough run for yields to end the week yesterday. On Friday, we saw 5-year yields go higher by 22 basis points on the week. That's its worst week since May. It is that 1-2 punch of the hawkish pushback from central banks and strong retail sales data. Now, the good news is we've entered the blackout period, so at least on one front, we're going to get a bit of a break. JP Morgan and Morgan Stanley both say that you should be buying the dip in the 5-year. Meanwhile, euro little change versus the dollar after some dollar weakness to end the week. We're going to get the ECB decision first on deck. Meanwhile, Bitcoin I mean, this thing has really struggled since the ETF launch. It is down 2.5%, just around 40,000. That's about a 13% decline from the peak in the pre-ETF run-up. So yeah, buy the rumor, sell the news, alive and well with Bitcoin. Now, I mentioned that really strong retail sales data yesterday. We also got another hint just about the pure strength of the American consumer, the hedonism, if you will. That UMich survey out on Friday, the most confident consumer survey that we've seen since 2021.
It's perfect, isn't it? And inflation expectations are dropping. It's nirvana. But that takes me to Evercore, because what they're talking about, I'm talking about record highs. You're talking about yields spiking higher. Can the two coexist? This is what Evercore are saying. Walls of worry are being rebuilt. The upside wall, new all-time highs, above 4,800 amidst politics and lower earnings per share. On the downside, you've got SPX at 4,600. That's your support, supported by a soft landing and bullish sentiment. So you want to trade around that 4,600 at 5,000. And I even had Deutsche Bank with me, 5,100. And that was even on an extreme scenario of no rate cuts. Go figure. Danny.
Yep, the bulls are alive and well in this equity market. Let's build on that. Let's bring in Mark Haefele, CIO of UBS Global Wealth Management. Mark, here's how the figures stack up to start this year. 10-year yields are up 23 basis points. The S&P 500 just hit an all-time high. Have we finally seen the decoupling of equities and rates? Can they finally move in opposite directions?
Well, we think it is a year where, it's time to get your portfolio back in balance, because there is room for upside both by investing in stocks and by investing in bonds. As I was up in Davos last week and heard central bankers expressing confidence that we're likely to get a soft landing. So some of that is certainly built into equity markets, but I don't think you can discount it fully at this point.
Mark, good morning to you. Fresh from the hills in Davos. Are you, what's going to drive you and the team? We've done a lot with Paul Donovan's, the hedonism of the consumer. So I'm curious to know whether you have weaponized FOMO or slight sobriety after a week on the hills and a lot of evening partying. Which camp are you going to fall into?
Well, Manus, as you know, when it comes to hedonism, I'm going to have to leave that to you and Paul Donovan. But I think for us, focusing on the consumer spending in the U.S. and how well that has held up is certainly one of the key factors we're watching, as well as the Fed's reaction and function towards employment, which, of course, has held up well, and that has contributed to the spending of the U.S. consumer.
But if you look in this equity market, it's not the consumer spending that's coming through, Mark. It's all about AI. It's all about the Mag 7. They were up 2.5% last week. Equal weighted S&P 500 actually fell in the week prior. Is there hopes for a broader equity rally, or is it still going to be that narrow leadership that continues to get us to new highs?
Well, I think the answer to that question is yes, in that we see opportunities for some of the top tech stocks, the ones with an AI focus, the ones that have really quality earnings, durable earnings, to continue to do well. But we are also looking in a more benign rate environment where the cost of money is falling. That should help give some relief to some of the smaller cap names that maybe are more dependent on refinancing. So I think you can get both factors working there.
Mark, it's just gone 5:06 a.m. in London. It's 10:06 at home in London, and it's 11:06 in Zurich. So let's just go slightly more global. I've got everybody writing, extolling the virtues of Japan. Where do you fall on Japan? I've got this flow narrative coming through my inbox, which is exit China, lump up large in Japan. Is that a flow narrative, or is that just people writing things for the sake of writing notes? Is there an opportunity in Japan relative to China? 22-year low on China stocks in Hong Kong this evening, I should say.
Yeah, I think that, there's no question that international investor sentiment towards China is, was lower last year, and I think there is still some movement. But we would encourage people to look more broadly at the EM index and, maybe look at other nations in Asia, not just Japan, which is not really an EM market, but India, Malaysia, and other markets that can still benefit from, there was growth. I think growth surprised to the upside a little bit in China last year. It did not help the equity market, but there's other nations that can take advantage of the deglobalization and onshoring that is taking place in Asia.
Mark, are you just going to let Manus get away with saying that some people write notes just for the sake of notes? Manus maligning an entire sell-side industry?
Well, everybody's got to write something, and we've all got to sell dreams somewhere, don't we? I mean,
Yeah, that's true. Look, they got to write something. We got to say something, Mark. And a lot of digital ink and real ink and words have been spilled about Donald Trump and the primaries and the commanding lead he has and how different this is to 2016, where it was only until May that Trump really seemed like he was going to get the nomination. This time around, Mark, given that we can prepare for it, what does it mean to prepare a portfolio for Trump? Is that even necessary?
Well, look, I think that first of all, for most investors, it's important to realize that the year of the presidential election, who is elected, which party, doesn't have that much influence on stocks, and indeed after the election. So tilting your portfolio based on party affiliations has often been shown to be a negative for most investors. And secondly, while the presidential election gets the most press, even this early, as we all know, it's the president and Congress together that shape the policy agenda, and there it's simply too early to say how that is going to play out.
Well, sorry, there was a great article over the weekend about the rerun of 2016 and what happened to the bond market, what happened to the dollar, and whether those are re-weaponized. We want to close off with your view on geopolitics in the Middle East. You say geopolitics is likely to remain prominent, but we think it's important to disassociate broad investment decisions from politics. But as you see mounting escalation in the Red Sea and trade disruption, Mark, is this, do you think it's still too early to say this is a temporary inflection point or push point on inflation, or is it just a watching brief? Because it does seem to be expanding, escalating, and certainly taking turns that most people hadn't thought we would take at this juncture.
Well, I think that the war has widened, but the question is it a widening war maybe? And, we still see the conflict as relatively contained. We do not see an impact on, despite the tragedy of the situation, we don't see that flowing through necessarily to inflation yet, either through the shipping channel, where the extra cost of shipping is a relatively minor cost in goods as consumers and businesses experience them. And then secondly, I think where we would want to hedge the geopolitical risk remains through the energy channel. We think that the energy market is relatively imbalanced with a slight undersupply, and therefore if the conflict were to escalate, we believe you could see that in energy and oil, either stocks or in the commodity.
Okay, interesting hedge. Mark, we wish you well. We'll see you soon. On one side of the pond are Mark Hafley there from UBS with his thoughts this morning. Trending on the terminal this Monday morning. This is what we've got for you, Danny. Hedge funds delivering one of their best years for clients in 2023, producing gains of $218 billion on fees. That's according to LCH Investments. TCI made up $12.9 billion to top the rankings, followed by Citadel with $8.1 billion.
BlackRock is said to be looking to sell an office complex in Shanghai at about a 30% discount to its purchase price. That asking price reflects the sluggish commercial property market in China's biggest city, where office rents have dropped close to a decade low.
Macy's has rejected a $5.8 billion takeover offer from the investors Arkhouse and Brigade Capital. The U.S. retailer claims the offer lacks, quote, a compelling value. Shares of Macy's rising in the pre-market trade, as you can see, up under just 2%. Coming up with Danny and I, Boeing under even more scrutiny in the United reporting their earnings. We'll talk airlines and FAA expanding their recommendations right here on Bloomberg.
But as you know, he left the campaign trail today at 3 p.m., and in so doing, he was very gracious and he endorsed me, so I appreciate it. I appreciate that, and I also look forward to working with Ron.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Monday edition of Bloomberg Brief with Managed Cranny. That's me, Danny Bergen. That's her in London. Problems they're building and mounting for Boeing. The U.S. Federal Aviation Administration is recommending airlines inspect another 737 aircraft. This time it isn't the MAX 9. Here to tell us exactly what the FAA's recommendation is Sid Phillip, who helps lead our team coverage globally on aviation. I mean, this is worrying. Should I be worried that they're expanding the investigation into other planes, or say, actually, this is a good job, this adds a level of comfort for me? What are we investigating now?
So at the moment, it's actually it is a good thing for the aviation industry. And the airlines, this is the 737-900ER. So it's the previous generation. So it's not the MAX, but the generation that precedes it. And what's in common is the fact that they both have the similar or the same door plugs on those aircraft. And so the FAA at the moment is just recommending visual inspection. So they aren't going as far as grounding the aircraft, but they're sort of asking airlines to do a visual inspection to make sure that the bolts are tightened. The major operators of that aircraft are the Alaska, United, and Delta Airlines.
I got to say, the timing is just so awkward, too, to have United about to get peppered by analysts in their earnings. I mean, they probably wish the two things didn't come together, but United Airlines reporting earnings, is this going to overshadow their actual numbers? And what are we expecting for their figures?
So we're looking into the sort of figures and looking to see what the outlook is on travel, especially since we've seen a massive rebound since the pandemic. And we're looking to see whether that sort of reholds and sort of keeps going. And obviously the impact of geopolitics, but don't forget the MAX 9 and now the 900ER. So interesting earnings for them. And I'm sure they're going to get peppered with a lot of questions as to what the outlook is and whether they actually have enough planes to offer that outlook.
Yeah, I mean, their revenues, 34%, Bank of America have a big note out on them, 34% ahead of pre-pandemic because they opened first and went first. They had, I think, what Bank of America are calling the first mover advantage over the transatlantic. Spirit and JetBlue, it's a story that just keeps giving, doesn't it? I mean, they're going to appeal the judge's decision. What's the chances that they can actually get this overturned? The blocking of their merger, that is.
So at the moment, the analysts are still sort of very skeptical of the deal actually going through. And for JetBlue, this is really important because they can both expand capacity and they can sort of add aircraft as well as get pilots, both of which are required for them to sort of pivot into the top 5 of the US carriers and sort of compete with the big 4. For Spirit Airlines, it's slightly more existential. The analysts are saying that the company could be forced into bankruptcy. So at the moment, it's really significant for both these carriers to get the deal done. But at the same time, analysts aren't really sure that this deal is actually going to go ahead.
Just so much drama in the airline industry right now. Sid, I mean, this is like our daily segment with Sid Phillip on airlines. Thank you so much for joining us. That's Bloomberg's Sid Phillip. All right, man, it's a quick check on bonds as we head to the break. U.S. 10-year yields taking a bit of a break after yields pushing higher. But here's the big news. The spread between Italy and Germany is at its narrowest since 2022, ahead of an ECB decision. This is as investors have been gorging on debt. It wasn't that long ago that Italy, the periphery, this was the bond market. We were worried about the euro area crisis, but Vanguard says buy, rate cuts are coming, and stability is in. This is Bloomberg.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. New time starts Monday.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
The 2024 nominating contests are here, and the candidates are making their cases to New Hampshire voters ahead of the primary.
And we're off to New Hampshire.
Bloomberg is live on the ground, bringing you the fastest news,
Trump is leading by a long shot,
insightful interviews,
These candidates are trying to target independent voters.
and the most informative analysis about what it all means for November's presidential election.
What is your path to the nomination?
Coverage continues today, only on Bloomberg.
It's Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Manus, how's this for a goodbye present? James Gorman, in his final year as CEO of Morgan Stanley, is getting a 17% pay bump. His entire pay for the final year for 2023 is going to be $37 million. That's a 17% increase and follows a 10% pay reduction the year prior. It's almost as saying, thank you, goodbye as our CEO, thank you for the bloodless handover.
Well, he got more of a bump than Jamie did, didn't he? Jamie Dimon got 4.3% and $36 million for 2023, and he pulled in the biggest profit in the history of American banking. So, you know, go figure. It's like, you know, goodbye, have a great time, buy the yacht. At 3/4 of that remuneration, by the way, well, yacht, whatever, I don't know what you buy with 36 million. 3/4 of it is in deferred stock over 3 years. And there were special bonuses. Do you remember the two that didn't get the job? Mr. Pick got the job as the new CEO. So you got Andy Saperstein and Dan Simkowitz. They got special bonuses, 20 million.
Well, I was going to say, Pick also got his base salary lifted to where Gorman's was. So his base salary previously was $1 million. He goes into CEO. It's $1.5 million. I mean, what's $500,000 between friends? But I guess that would be kind of awkward to take over the top job and say, hey, but my friend Gorman, he's been getting paid $500,000 more than me, so they've right-sized that too.
Absolutely, it's good to be equitable in this world. Let's talk about Jane Fraser's strategy at Citi, because Reuters have this story over the weekend that Warren Buffett, who's one of the biggest shareholders, he's got just under 3%. He's backing Jane Fraser, and he, you know, apparently on Thursday she said to her board that you know, Buffett had encouraged her, you know, go forth, keep doing, you know, keep fighting the fight.
Yeah, how much would you love just to be like the waiter at the lunch between Jane Fraser and Warren Buffett? I wonder what they tip. Hopefully, hopefully a healthy amount. But anyway, I love this because it's almost as if, in a way, Jane Fraser is like, well, if you don't trust me and what I'm doing as CEO in this reorg attempt, surely you trust the Oracle of Omaha. If he's giving me the green light, then dear shareholders, surely you're also going to give me the green light.
We've also got form. I thought I'd just go back and have a look at where Buffett actually invested in banks. American Express, way back when, that was 1964. But of course, he went into Goldman's. Do you remember in 2008, at the height of the crisis, he lumped in, looked large in Goldman's, and of course, he put $5 billion into Bank of America. So he has got form, knowledge, and a return on equity that's pretty good. I mean, there was a couple of faux pas here and there. They've not all been resplendent return on equities, one would have to say. I think there was a bit of difficulty in one or two of the investments with Solomon, etc. But he's got knowledge on banks.
Yeah, he certainly does. And often he kind of correlates, hey, I'm betting on banks because I'm betting on America. I have confidence in the American economy. Therefore, I have confidence in these big banks and clearly confidence in Jane Fraser.
Buy America. Let's have a look. Let's see what the dollar's doing, because, of course, we're going to get PCE later in the week. We're going to get the best back-to-back growth in a couple of years here in the United States of America. This state of play, it's not as exciting as I am, is it? I mean, it's quite flat. The dollar's 12.35. I mean, I'm trying. Look, it's 25 past 5 in a Monday morning.
Wake 'em up.
In New York. Bid 'em up there. The dollar, 12.35. Flat on sterling, 127. That's
operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest
in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, the electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Real World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to Bloomberg Brief. I'm Anna Scranny in New York.
And I'm Danny Berger in London. Here's what you need to know. Wall Street's record rally bets on a soft landing, and the AI boom push U.S. stocks to a new high. That optimism may be fueled as more earnings roll in. Big tech and airlines get set to take the spotlight this week. And Ron DeSantis bows out of the U.S. presidential race, narrowing the Republican field to 2 major candidates, Donald Trump and Nikki Haley. Well, the bond market got a shock last week between hawkish Fed speak, all of that pushback, not just from the Fed, I should say, a lot from the ECB and Davos, too, alongside bullish retail or hawkish retail sales data. We take a breather from the selling today. We're down about a basis point on the 5-year yield, though 5 years got crushed last week, the worst week since May. JP Morgan and Morgan Stanley both say buy the dip. Euro, that's little change despite Manus's enthusiasm over FX. Not a lot of movement. Euro is slightly weaker. Manus, okay, here's something you can get excited about. Or sad, I'm not quite sure. Bitcoin, look at this thing, down 3.33%. It's trading at 40,000. It wasn't that long ago. It was at 48,000 over the ETF enthusiasm. Your beloved Bitcoin, Manus, it's struggling.
You're bang on the money there. I mean, that is buy the rumor, sell the fact. If there was ever a trashy representation of a cliche, there you go. And you know what? You got to get excited about something. So let's whip it out for the two. It's been 2 years since you've had a record high on these equities. So let's go whoop, whoop, whoop. The question is, can it coexist with this rising rates environment? Hopefully, the global CIO at UBS says yes, we can. Yeah, you got people probably coming in buying these rates at these levels, but stocks are higher again this morning. NASDAQ was up 3% last week. You're looking at an index which is trading at 30 times its earnings. Can it coexist? Can it trade higher? If you take NVIDIA had a beautiful week last week, but also too did AMD, and AMD has actually outperformed NVIDIA of late. So that kind of momentum, that kind of breadth, it's going to be a big week for reporting. AMD is up 0.5%. The leadership in this rally, AMD, Broadcom, Merck, all rising. AMD up 65% from its lows. So it's an earnings onslaught this week in the tech sector. But of course, this is a great representation of maybe where you want to allocate. So this is obviously US equities relative to Chinese equities quoted in Hong Kong. You're going to need punchier policies. That's the narrative from UBS. Fund managers are cutting their allocation, and the Hang Seng Enterprise is at a 22-year low. So the question is, are these valuations rich, or do you feel sufficiently bullish to engage again and go long? Lock, load, and reload. Danny.
It wasn't that long ago we had a lot of China bulls saying, look at how much Chinese stocks have fallen. Surely now is the time to jump in. But it just has been proven to be catching a falling knife. And even though in terms of narrow leadership, you look at just the S&P 500, Manus, it was big tech that got us to a new record, up more than 2.5% on the week, while the equal weighted index, that actually fell last week. So for all the excitement of a broader leadership, of a bigger rally, it still is tech, it still is AI that's getting us there.
Hallelujah. Let's talk about those tech earnings. They kick off this week, as I said. You got Netflix tomorrow, Microsoft and Alphabet kick in later in the week. Nancy Tengler, CEO, CIO at Lafayette Tengler Investments. Nancy, good morning. Are you prepared to commit heresy and say that you can live with a little bit less of Magnificent Seven, or is it actually managed, this is not that frothy? Relock, reload, engage.
Well, I think what might happen, what often happens, is that you get earnings, they're good, the stock pops, and then it sells off. And that's what happened in 22 all year. You had companies turning in 20, 25% earnings and revenue growth. A company like ServiceNow, it would rally after and then sell off. So I think if these stocks do pull back, you do want to step in and buy them because the valuations, as you point out, are not frothy. I've drawn an analogy to the 1990s. Mm-hmm. Just look at Microsoft as an example. It was trading at 51 times peak earnings in the late 90s, and now it's trading at 30-ish times not peak earnings. So I think there's room, particularly because these companies are much more robust, and there's a secular tailwind behind cloud still, and generative AI, for sure.
Well, on that point, Nancy, I mean, you've said it to us before, not all tech is created equal. Dan Ives writes that we believe the key narrative for fourth quarter earnings season is the beginning of the AI revolution hitting the shores of the broader tech landscape, being led by Nadella and Microsoft, along with the godfather of AI, Jensen and NVIDIA. I love that, the godfather of AI. By the way, there's a picture out there. I showed it to Manus. It's Jensen wearing a pink tiara in China when he was doing his NVIDIA tour. I highly recommend you go out and find it. But Nancy, is there any story besides AI this earnings season for tech?
Yeah, well, I think so. I mean, if you just look at across the board, these companies were already robust prior to our enthusiasm around AI. But I think it will be the marginal differentiation when they report. Companies are now monetizing, led by Microsoft. I mean, I love that they put a Copilot key on the keyboard, first change in decades, I think. So I think you want to pay attention to how they're utilizing it. But as you pointed out, they're not all created equal. I mean, we unfortunately don't own NVIDIA, but we do own what I call the poor man's AI, which is Broadcom. Sorry, poor man's NVIDIA. I didn't have enough coffee.
Love that.
How do you do this?
NVIDIA. I think that's brilliant.
Someone needs to get
like,
us more.
No, I gotta go. That's like living in poor man's Kensington. I've got an apartment.
That's where I live.
I've got an apartment in poor man's Kensington. But what is it that would make me go across the bridge? And is there anything that would make you buy NVIDIA? If you've got the poor man's NVIDIA, are you happy enough with that as your exposure per se to a sector? Or what is it that would make you buy some NVIDIA?
I mean, we're looking for an entry point. You just can't chase these things on the way up. That volatility happens on the way down. So we use relative price to sales ratio. The stock is attractive based on that basis. But the other side of that argument, Manus, is that I sat and watched Amazon for about 10 years and said, I don't get it. There's no earnings. Classically traded, it's up 175,000% since the IPO. So with these generational growth stories, I should probably take my own advice and just jump in.
I never listen to myself. Danny, jump in here.
Well, why are we listening to you?
Everyone else listens to you, Nancy, so yeah, that's a great question. On the sort of idea of integrating AI, some of these, not old tech players, but old relatively. You mentioned Microsoft, but Microsoft's investing in OpenAI. What do you think of Apple, for example, saying that we're going to incorporate more AI in our next update for iPhone? Do you care about something like that, or is it just something buzzy, but ultimately it doesn't change the fundamental story?
I think it's the latter, Danny. I mean, one of the things about Apple, we own a small piece. We used to own it. It was our largest holding. We started buying it in 2012. But one of the things you have to pay attention to is share buybacks, because that will put a floor under the prices of these stocks. And so Apple may be a stock you buy on that basis, I'm sorry to say, and not necessarily on the fundamentals. But I think AI will help a company like Amazon, which is utilizing it in advertising, and that, in fact, will drive revenues pretty dramatically, $5 to $8 billion in 2024. So we like the names, and we also like old economy companies that are utilizing AI, and that, to pivot, and that's been a theme for our portfolios.
You also talk about margins. I mean, sometimes it's great to talk about the big headline froth and AI. I'm going to pay $20 to use AI in my own life. I think that's quite a low price. That's the one thing that surprised me. I think, actually $20, I think people would pay an awful lot more. But you talk about the robustness and the lovely word, the imperviousness of margins. So who has the strongest margins?
Well, I think a lot of the software companies. So I'd take a look at, like, we call Adobe the unsung hero of AI, simply because they really do have a lot of use cases for AI in their model. So I like Adobe, I like ServiceNow a whole heap, even though it's been up and up and up. We also like the cyber names, so Palo Alto Networks. You really want to focus on great CEOs that were able to deliver earnings growth in 2022. And improve, or at least flat margins in 2022, which is a Pyrrhic victory. And now what I think you'll see is continued growth in the leverage these companies have to margins. So I like, and then the free cash flow stories like Amazon.
Nancy, I can't help but wonder, for a lot of the up-and-coming AI, last week, for example, there was this headline that the Google DeepMind scientists were leaving and were going to do their own startup. You think of the big startups, OpenAI, I mean, barely a startup anymore, it's massive. OpenAI, Anthropic, those kinds of names. Are public investors at a disadvantage? Is it really you need to be a private investor who can get into these companies to really capture the growth in up-and-coming in AI?
I mean, that is such a great point. Yeah, I think if you really want the initial pops, but if you go back in appreciation, if you go back to just the example of Amazon, you can still make a lot of money after the IPO, even though companies are waiting a longer time to IPO. I do think if you don't have access to private equity, then you try to nibble around the edges, and that also proves to be a pretty profitable strategy.
Nancy, can I just say I'm really excited for when you next join us to hear if you've bought NVIDIA or not?
Oh. Me too.
I think that's going to be the first question. That's absolutely, so giving you advanced warning to prepare yourself.
One share on the way.
Will it ever have a temper? Will it ever have a correction? That's the question,
It has. I mean, it got into our buy range for about 10 minutes a couple of years ago. But
10 minutes.
That's the best line ever from a fund manager. It got there a couple of years ago for a couple of minutes.
I love it. It's like your buy the dip radar needs to be on all the time. Right. Nancy, so lovely to have you on. I've spoiled it. You already know your first question next time. Nancy Tangler of Floffer Tangler Investments. Can't wait to see you again. Okay, coming up, we're going to talk politics. DeSantis is out after seeing no path to the GOP nomination. The Florida governor calls it quits on his presidential campaign. We have that next for you here on Bloomberg Brief.
Studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action at a new time, 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha, and he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money, and number 2, don't forget rule number 1.
You later got asked to be the head of USAID.
I got that job when I was 36 years old.
36 years old. You're running USAID. How many employees does it have?
We had 11,000.
And did you feel qualified to run something that big?
I did until, the work started.
I am today suspending my campaign. I'm proud to have delivered on 100% of my promises, and I will not stop now. It's clear to me that a majority of Republican primary voters want to give Donald Trump another chance. I signed a pledge to support the Republican nominee, and I will honor that pledge. He has my endorsement because we can't go back to the old Republican guard of yesteryear.
Florida Governor Ron DeSantis as he officially drops out of the 2024 presidential race. Joining us now is Kate Ackley of Bloomberg Government. Kate, Ron DeSantis had put in so much effort into that Iowa caucus, spent so much money, so much time focused on it. Is it a surprise he dropped out? Was it Iowa was the moment? If he was a distant enough second, it made no sense to continue on.
Yeah, and we saw a lot of his donors kind of abandon him. There was clear consensus on Capitol Hill, especially among House Republicans in the leadership, just, consolidating around Trump. If you looked at the polls out in New Hampshire, DeSantis was looking at like he could get single digits. It was, he was looking at potentially a very poor performance in New Hampshire.
There's obviously a battle royal now between Trump and Nikki Haley, and the question is, does she really have a path to nomination? We both coalesced around Terry Haynes. All 3 of us read this, Terry Haynes' piece, where he talks about the missing 15% of New Hampshire voters, which are the Chris Christie voters, along with the DeSantis voters. So could she be emboldened, or would this be a fake read if she picks up those extra votes?
Well, we did see, a lot of her supporters kind of cheer when it was announced that DeSantis was dropping out, but it doesn't necessarily mean that it will help her. A lot of those DeSantis voters could easily go for Trump. DeSantis endorsed Trump. There are many kind of DeSantis supporters that don't like Nikki Haley. Of course, there are some that don't like Trump. There's also the factor of people who are independents or, Democrats who come and vote in the Republican primary. Could they back Haley? Would that hurt her with some of the conservatives who support her? There's just a lot of dynamics happening here heading into Tuesday's vote, but then also into South Carolina, Nikki Haley's home state.
So what does support, actual money, actual donations for Nikki Haley look like now? Does it help on that front with DeSantis gone?
That's a really good point. And there are some donors that could consolidate to Nikki Haley at this point. But again, Trump is coming in with a lot of momentum. He's got a lot of momentum from other elected Republicans, House Republicans lining up, people trying to be, maybe seen as auditioning for his vice presidential pick. So you're seeing a lot of momentum for Trump.
Kate, thank you very much. And just on that, Trump's certainly taken a hack to Haley on foreign policy. She doesn't essentially have what it takes to go head-to-head with Putin, Xi, or Kim Jong-un. And it's interesting that he's attacking her on foreign policy and leadership around that in terms of the role for vice presidency. Very scathing late on Friday. Kate, thank you very much. Kate Ackley, Bloomberg Government, on the latest moving parts as DeSantis drops out. And tune in tomorrow for special coverage of the primary live from Manchester, New Hampshire. Let's stick with politics now and go to the overseas story on Israel-Hamas, where the Prime Minister of Israel, Netanyahu, has rejected what he calls the unacceptable terms by Hamas for a new hostage release.
Hamas is demanding, in exchange for the release of our hostages, the end of the war, the withdrawal of our forces from Gaza. Were we to agree to this, our soldiers would have fallen in vain, and the next October 7 would only be a question of time.
Ros Matheson joins us now. Ros, is this Netanyahu digging in for a longer haul? I'm surprised, just in terms of his absolute stoicism on this. He's not for moving at all.
Absolutely adamant, as you can see from those comments. And of course, they came after he had yet another conversation with the US President Joe Biden, the US, Israel's biggest ally, pressing Israel to tone down its conflict in Gaza, to think about the longer term in Gaza. And despite all of that, and the US also, alongside Europe, saying we really need to talk properly about a two-state solution. Every single time that gets mentioned, the Israeli government, Benjamin Netanyahu and others, and say that's absolutely cannot be on the table. The first thing we need to do is to achieve our goals in this conflict, which is to take out Hamas once and for all, to secure the release of the remaining Israeli hostages who are still in Gaza, let alone talking about a two-state solution. That's just not going to happen. And so the question is, what could happen in all of this to persuade Israel differently if they're not listening to the US or to Europe on it?
Would they listen to the EU with Joseph Borrell saying that instead of destroying Hamas, they're going to be seeding hate for generations?
Well, that's the thing. Europe really doesn't have as much sway over Israel as the US does. They do have economic levers they could pull potentially as trade partners with Israel. I mean, the US could do the same, but that's really starting to get into difficult territory with Israel, is to say we're going to use economic leverage over you to try and force you to change your course on foreign policy. Right now, what they're trying to use is very much the diplomatic route to get there, and that's not happening. But you can see that collective frustration really is growing. And for Israel, that means on the global stage, increasingly potentially isolated. It doesn't mean the US is not going to support Israel for what it's been doing in Gaza, particularly against Hamas. It's not going to help defend the Red Sea and so on. But you can see bit by bit, the language changing and the concern rising.
Yeah, it's definitely that rhetoric point. Ros, thank you so much for joining us. That's Bloomberg's Ros Matheson. Okay, a quick check on commodities. Of course, the issues in the Red Sea continue, but that's not really doing much to raise the price of oil. Instead, it seems only up about 1/3 of 1%. It seemed that the market was more focused on the restart of output at Libya's largest oil field. That countered some of that war risk premium being priced in. Meanwhile, nat gas falls about 6%.
Yep. Coming up on the show, we're going to take a look at some of the market-moving events for you. Big week for data. We've got the PCE at the back end of the week and GDP. We'll run you through the slate this Monday morning in just a moment, right here on Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year. Most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's Bloomberg Brief. Danny Berger in London, Manish Cranny in New York. Okay, let's get you set up for your first trading day of the week on this Monday. First up, a Bank of Japan rate decision comes in on Tuesday morning Eastern time. Markets are widely expecting a hold on rates this month. Then PMI data out of the U.S., Eurozone, Germany, France, and the U.K. All of that will come on Wednesday. Then we're also going to get U.S. GDP on Thursday. Finally, it's the ECB's turn with a rate decision on Thursday. That will be followed by President Lagarde's press conference. In the meantime, Manis, it does seem like this market has been able to put the macro aside for one moment, put the higher yields aside for one moment, and focus in on earnings and individual company stories to get this equity market to a new high.
Yeah, look, it's been 2 years since we've had a new record high. So some context around this. It's going to be a belter of a week for tech earnings. We just had a conversation with Nancy Tengler. She doesn't feel that they're overvalued. These are some of the other corporate stories that we're tracking through the day. You got Macy's there, Danny, rejecting $5.8 billion takeover from investors. The question is, does a white knight come into this? How do they survive? Do they squeeze the tube of toothpaste on the bid? $5.8 billion, $21 a share is the offer that they made last month. Can that be squeezed higher on Macy's?
Yeah, and I guess investors think that it can, considering shares are up 1.5%. Manis, you found this one, Boeing down 1.33%. More scrutiny for Boeing. The FAA is now recommending that they do checks on yet another 737 model where operators also found issues with fasteners. Again, it's this issue of image, of safety with Boeing. We also have earnings. We have United Airlines. Surely that's going to come up with United, considering they have so many Boeing planes.
Yeah, I mean, look, this extends. United Airlines, I mean, in terms of this, the expansion of this investigation, it's on the 737-900ERs. Now, globally, looking at that, you've got United, Alaska, and Delta are the biggest owners. There's 505 of these planes globally, and it's going to be, and of course, United have got their numbers this week as well, Danny. So I think it's going to be like a bit of a 1-2 punch on United. In other words, how are you doing internationally? And then where are you in terms of your fleet and your fleet management? Now, B. Riley, they're also plunging. They've got an SEC investigation there, Danny, don't they?
Yeah, I mean, almost 19%. Essentially, the SEC is investigating them and their deals with the key client who was linked to securities fraud and the use of his assets to help the bank obtain a loan from Nomura. So Nomura is also wrapped up in this. That's according to people familiar. The firm has said it hasn't received anything from the SEC yet. So that's their response, Manis.
Monday morning, 5:55, the question you got to put through your mind is this: can this new record high, rocketing their way to history? I love the title of the Bloomberg story this morning. We're up again this morning. Will you see buyers of the bond market? Have we peaked out in yields? And is that what allows this equity market to fly higher, Danny? We are up. It's the first time in 2 years a new record high.
But has the spell been broken? Usually when there are higher yields, as you're kind of alluding to, Manis, it's bad for stocks. That wasn't the case last week. Is that correlation finally back to normal? It would be a party for the 60-40, for the risk parity, something they've all been waiting for.
So many people say the only way to really deal with climate change is kind of eliminate oil and gas and then have more clean energy. Is it realistic to eliminate oil and gas in the foreseeable future?
You actually have to at least mitigate it. I think you have to bring a lot of it down and replace a lot of it, but you also have to, you can also have a huge impact by trying to do things like carbon capture and so forth, right, and around it. And it's going to take both approaches. Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, you know, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year.
Things like solar or wind, it's nice and environmentally friendly, but really it's not going to be produce enough energy to really replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. You need, this is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. What we do at Breakthrough, we look at technologies that could produce half a gigaton, remove half a gigaton of carbon a year. And the way to think about that number is we have to remove, say, 100 half a gigatons, you know, a year in terms of what we have to replace.
The market is being aggressive on rate cuts, all right? And I believe that the Fed is going to take its time.
By the end of the year, they will start cutting.
Our core team has 4 cuts, and 4 cuts, 24 and 25.
The 6 rate cuts, that's a pipe dream if we have a soft landing. That's not happening.
The market is now calling for a 175 basis point cut by the Fed. Really? How about this? No way. No way at all.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Lisa Abramowitz together with Anne-Marie Hordern. I'm Jonathan Ferro. Your equity market on the S&P 500 positive by 1/3%. Bramo, leaving behind the doom and gloom of Davos. Welcome to New York City with equity markets at record highs.
Does it feel like record highs? That's what I would ask you, given the fact that if you look at equal weight, it's actually down on the year. You look at NVIDIA, up 20%. Is this just NVIDIA driving the entire market up? And that, to me, is one of the big questions facing the market.
AMH, that's the markets. Let's talk about the politics, the political cycle, the gift that keeps on giving to the news cycle. The Republican race goes from 3 to 2.
Yep, then there were 2. So now we have really a head-to-head race in New Hampshire as we go into that primary tomorrow with Nikki Haley and former President Donald Trump. And DeSantis, in a 4.5-minute video he posts on Twitter deciding why he's backing out, he decides to endorse the former president.
That's the Republican race. We need to talk about what's happening with the president. The calendar, is it on his side? Consumer confidence Friday, Bramo, bouncing back. Inflation expectations coming in. Are we going to see more of that in the next few months?
The perfect soft landing. If you take a look at markets, that seems to be the implication as you see bonds losing value, but stocks gaining. Basically, we can exist at these types of rates and companies can still really accelerate and do well. Does this last? That's really the question. Can this last, or does something have to give? A lot of people seem to say a lot of things have to give. At Davos, not so much.
Let's take a look at the financial markets right now. Good morning to you all. Equity futures on the S&P 500 positive here by around about 1/3% on the S&P. In the bond market, yields coming in about a single basis point on a 10-year 4.11. That was not the story last week, Bramo. Yields higher across the curve.
And basically, this comes after a lot of pushback. You heard that, no way are they going to cut rates by 6 times. But at this point, it's good news for stocks because even though you could see bonds blow out, you could still see stocks do well. And that seems to be the presiding sentiment for the moment. We shall see.
Howard Lutnick's welcome back anytime, right?
100%. 100%. Yes, exactly.
Just to push back against rate cut expectations. Coming up on this program, kicking off the week with equity markets at all-time highs on the S&P 500. It's quiet this week. Bramo, on the earnings front, it picks up next week with big tech.
We get a little bit of a teaser, though, with Tesla tomorrow. And then, of course, later on this week, we get Netflix. I am curious to see whether they can reprise some of the gloom that we've seen in those particular sectors. There's been a lot of splintering in big tech. Is this just AI AI, and then everybody else? Or is this still going to be the Mag 7?
We'll head down to Washington, D.C. in about 15 minutes' time. DeSantis dropping out of the 2024 race and endorsing Trump. AMH, you've got to figure out, is that good news for Trump or good news for Nikki Haley?
I think because of the timing as we go into New Hampshire, potentially it is good news for some individuals, for Nikki Haley. But the problem is he was polling about 5% in New Hampshire. So is that 5% enough for Nikki Haley? Because if you look at the CNN poll over the weekend with the University of New Hampshire, Trump is up 50% in New Hampshire. A lot of donors, I think, are giving her the grace period of New Hampshire. But if he wins New Hampshire, it's almost over for her.
Away from electoral politics, a focus on the Middle East this morning as well. The United States continuing to strike Houthi sites. This quote from the president, I found this absolutely stunning over the weekend. Are they stopping the Houthis? No. Are they going to continue? Yes. Can you make sense of that?
What they are trying to do is degrade the Houthis' capability of going after the ships. But until they potentially go after some higher level targets, the Houthis doesn't look like they're going to be stopping anytime soon.
This just is a tortured kind of balance to try to avoid some sort of larger altercation. That's what it feels like. Whether it's a clear strategy, not so much. At the same time, it's a clear aversion to wanting a broader Middle East war.
Jennifer Flitton of Invesco joining us in about 10 minutes. Don't miss that conversation on this. We begin with our top story this morning. Equity markets at all-time highs, but Gillian Emanuel of Evercore ISI saying be prepared for the volatility of an election year, writing this. Given that a momentum market can keep going until it stops, we want to own option convexity upside calls and downside puts. It is very difficult not to make money, whether you are a bear or bull, Democrat or Republican. Gillian Emanuel of Evercore joins us right now for more. Gillian, good morning to you, and thanks for being with us.
Pleasure.
First
Great
guest in our brand new studio. Thank you very much. Let's get straight into it. Can you make money this year in an election year and ignore the politics simultaneously?
You can't ignore the politics. Obviously, the cycle will not allow you to ignore the politics. But from our perspective, again, if you look at the last several weeks, you have what you had once again, I think, back towards the summer of last year, the momentum trade really dominating all, and obviously generative AI, which we believe is a very viable long-term theme that is going to be embraced around not only corporate America, but the entire world as a productivity enhancer. But every now and then, things get ahead of themselves. And to us, this is one of these times where, look, the teasers talked about too many rate cuts being priced in, too much earnings anticipation being priced in, and all of those are likely going to cause a bit of a pause here.
You sort of put a number on that, 10% decline, a potential correction in equity markets. What do you do with that if you're bullish long-term or kind of bull and bear, Republican and Democrat, just sort of watching everything and saying, I'm going to still make money? How do you make money if you're expecting a correction?
Well, option hedges are extremely inexpensive, given not only the volatility that we've seen in the last couple of weeks, but the volatility that is typical of this kind of year when the balance of power coming into the election year is as tight as it is. But what we would say here, and this is the type of conversations that we're having with clients, is it's less about the defensive aspect and more about staying invested in themes that are likely to work. And to us, that is communication services, that is healthcare, that is consumer staples, in anticipation of a more advantageous time to deploy capital, which we think comes later in the year.
Do you think that what we've seen with bonds underperforming and stocks outperforming can continue over a longer term? Or do you think that this is sort of the beginning of that reset? It's kind of a sign to you that we're going to see that correction that you're expecting?
So we have to go back to the 90s. A lot of what's happening really has reference to the 90s. There was a lot of money made in stocks with yields and interest rates at these levels. It's less about where, are we going to revisit 5% again in the 10-year yield? That's not likely, given, in particular, our call for a slowdown in the economy at mid-year. But frankly, if the volatility in the interest rate markets calms down, that is a better sign for an equity investor in terms of understanding risk reward.
Let's go back to the start of the year. You put out a note and you say, what can shake the nothing can go wrong optimism? Let's talk about everything that has gone right in the last week. Retail sales came in hot. Jobless claims came in much, much lower. Then you look at consumer confidence picking up and inflation expectations falling. Isn't everything just kind of going right to start the year?
It is at the moment. There are only a couple of sort of ancillary points. Empire Manufacturing Survey, quite weak. The ISM services verging towards that 50. But, you know, frankly, the concept of the slowdown, the non-soft landing, is still on the shelf for now.
You got to the essence of it. Last week was a clean sweep. You look at the rest of the economic data over the last couple of months, you see some conflict. How much of the economic data that you look at on your dashboard at the moment is in conflict?
It is a small but slowly building number. In fact, Evercore ISI's proprietary corporate surveys have started to show a little bit of weakness, that there was some stability and some advance in and around the holiday season, which is why I think, again, a lot of these confidence measures are really sort of more coming off of the holiday season. Let's see how that evolves into February.
Julian, you talk about volatility with an election year, but you're also overweight defense stocks. Would that change if we were to see Trump back in power and take a more isolationist approach?
Well, I think that there is a bit of a conflict in terms of how the sectors are likely to perform. If you look at the last two election cycles, there was, you know, a deep ratification of the more industrial type stocks and sectors. But actually, when you think about this year, again, we go back to this idea that what's driving the market right now is very much concentrated around AI. And the way we know that is if you look year to date, the more economically sensitive sectors, consumer discretionary, industrials, materials, all down on the year.
So regardless who wins, AI is the winner. Trump or Biden in the White House?
We think so. But again, this is one of these times where these things go in ebbs and flows. I'm reminded of the middle of 1999 when the NASDAQ pulled back about 14% on its way to 100% rally, and a stock which has become, you know, the world's most iconic stock pulled in 29% to a split-adjusted price of 50 cents versus its current level, about $190 a share. You have to think long-term and be able to ride out volatility.
Julian, great to have you with us. You're going to stick with us. The comfort with AI last week in Davos was, I would say, unsettling from my perspective, just how comfortable everyone seems to be with the trajectory of that technology.
Because it's going to take over our jobs and potentially rule the world and undermine the financial system. Is that what got you concerned?
I think bottom line, it has the potential, has the real potential to do to services what globalization did to manufacturing. You couldn't trust government last time around. I'm not sure why you should trust them this time around.
Michael Spence pushed back on that a little bit.
Just a bit.
Just a bit. And I too, though, I mean, that was the subject of conversation this weekend with people in my family saying, isn't that going to be Armageddon for older people in particular? A lot of people push back on that. I agree with you. Where is the trust? Rebuilding trust was the theme, right?
When I say this to individuals, especially one I spoke to at Davos who runs an AI company, he says, no, Eric, we're not trying to put you out of business. We're just trying to enhance your job. We're going to make it easier for you to do your job. But it is a little bit concerning.
Yeah, before we see some computerized Anne-Marie Hordern doing the news and someone programming it in the control room, like we're this close to that. Okay, let's take a look at some of the top headlines from stories elsewhere. Let's catch up with Danny Berger with your Bloomberg Brief. Morning, Danny.
Good morning, John. Florida Governor Ron DeSantis has dropped out of the 2024 presidential race on Sunday. Now he's endorsing Donald Trump. DeSantis exits the race just 2 days before the New Hampshire primary. Former UN ambassador Nikki Haley is now the second-place candidate. The latest Emerson College polling shows Trump leading New Hampshire with 50%. Haley is at 35%. Macy's has rejected a $5.8 billion takeover from investors Ark House Management and Brigade Capital Management. The offer, initially made last month, represents a 19% premium to Macy's closing price on Friday. Macy's board declined to provide due diligence to Ark House and Brigade. Ark House says it is, quote, highly motivated to make a deal. Spirit Airlines says its deal with JetBlue remains, quote, in full force and effect as the carrier looks for ways to shore up its liquidity. The discount airline also plans to refinance its debt. It's an effort to ease anxieties over the merger fallout. Spirit says in a regulatory filing that a combination with JetBlue is, quote, the best opportunity to increase much-needed competition and choice. That's your Bloomberg Brief. John.
Hey, Danny, thank you. Appreciate the update. Up next on the program, DeSantis dropping out, endorsing Donald Trump.
I am today suspending my campaign. I'm proud to have delivered on 100% of my promises, and I will not stop now.
That's coming up next. You're watching Bloomberg Surveillance.
On the heartbeat of the tech spread across global markets.
The real-time data aspect is going to be important. We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Could face bigger challenges next.
Was going to keep reading World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
The 2024 nominating contests are here, and the candidates are making their cases to New Hampshire voters ahead of the primary.
And we're off to New Hampshire.
Bloomberg is live in the ground, bringing you the fastest news.
Trump is leading by a long shot.
Insightful interviews.
These candidates are trying to target independent voters.
And the most informative analysis about what it all means for November's presidential election.
What is your path to the nomination?
Coverage continues today, only on Bloomberg.
Live from New York City this morning. Good morning. Quick check of the price action for you on the S&P 500. Equity futures positive here by 0.33%. Yields a little bit lower. We're down 2 basis points on a 10-year, 4.1%. Under surveillance this morning, DeSantis dropping out, endorsing Donald Trump.
I am today suspending my campaign. I'm proud to have delivered on 100% of my promises, and I will not stop now. It's clear to me that a majority of Republican primary voters want to give Donald Trump another chance. I signed a pledge to support the Republican nominee, and I will honor that pledge. He has my endorsement because we can't go back to the old Republican guard of yesteryear.
Here's the latest this morning. The race for the GOP nomination down to 2, just ahead of the New Hampshire primary. The latest polls show Donald Trump widening his lead. Nikki Haley intensifying her attack on the former president, saying, quote, "We're seeing he's just not at the same level, Anne-Marie, as he was back in 2016.
Yeah, and a lot of people are talking about that video of him over the weekend when he kept talking about Nikki Haley, but he meant Nancy Pelosi. But everyone today, Jonathan, in Washington is weighing on DeSantis dropping out. The Wall Street Journal themselves, their editorial board, saying, quote, does Mr. DeSantis have a presidential future? Perhaps. He's had a winsome political personality, but he has an excellent record in Florida. Republicans gamble on Mr. Trump again. Win or lose, the former president can't run again. Maybe then Mr. DeSantis will offer a conservative vision that offers more than second-string Trumpism. His biggest problem was he wanted to be Trump light. But the MAGA base, 30% of the party, wants the real deal.
This campaign started absolutely terribly, and Lisa just never picked up, did it?
And there were all these sort of postmortems talking about the infighting and the financial problems and some of the lack of direction, not to mention how do you fight back against somebody who you aspire to be. All that we can say is now the question is, A, is he on vice president watch?
And B, does this help Nikki Haley or does it help the former president more? And that really is yet to be determined.
Let's have that conversation right now. Joining us is Jennifer Flitton, the head of U.S. Government Affairs at Invesco's. Jennifer, great to catch up with you. Let's start there, whether Nikki Haley can really close the gap with Donald Trump.
Yeah, it's not looking good, right? I mean, those polls that you were referencing showing that most of those votes are probably going to go to Trump from DeSantis. And so that double-digit lead that Trump has going into New Hampshire, the momentum is behind him, and it's going to be potentially a difficult decision after New Hampshire if Haley doesn't get within at least 5 points of Trump.
So when does she drop out then if Trump does take New Hampshire, Jennifer?
Well, that's the question. That's exactly it. Because it's been really a month until South Carolina. And we have Nevada in between, but their election with the primary versus the caucus is now kind of put them off to the side. And so on February 24th, you have South Carolina. Now, if she comes within 5 points of Trump tomorrow, she could have some momentum, some real wind to her back. And that could keep the money flowing, which is really important going into South Carolina, which is her home state. But if her numbers continue to show that South Carolina isn't really in play for her, that could be embarrassing. And so she'll have to take that into account when making her final decision.
Well, does she even go for South Carolina if the polls were to remain as they are today in her home state? And of course, Senator Tim Scott decided to endorse the former president, and she's losing that state at the moment by more than 20 points. Is it safer for her to back out before she has this embarrassment in her home state?
Yeah, no, I think you hit the nail on the head there. Conservatives in South Carolina, right? And New Hampshire is much more independent. I mean, when you go into South Carolina, you're looking at a more traditional Republican base. And her numbers are not as good in South Carolina as they are in New Hampshire. And you mentioned Tim Scott endorsing Donald Trump, but also it's the governor of South Carolina endorsing Donald Trump. And most of the members of Congress, I think only one endorsed her. And so you have a real momentum there for Donald Trump in South Carolina. Jennifer, is Ron DeSantis gunning to be vice president? You know, I don't think so. I think Ron DeSantis is looking to 2028. I think he is, young, 45 years old, and he sees a political future for himself, but I doubt it's running alongside Donald Trump. Meanwhile, there are some things that have to get done, like passing a budget and dealing with national security concerns. And there seems to be a bit of a stalemate, although some progress. What do you think are the chances of, yes, getting a bill passed to get some sort of spending done this month, but that also can carry through to March, to February to March, so we don't end up with this just on repeat again and again and again with more acrimony each time? Right. So they were able to pass a CR March 1st and then March 8th. Still sort of staggering those appropriations bills. And Schumer and Johnson were able to reach a deal on a top line spending number, but they still need to get those 302B numbers. And those are the numbers that are the thresholds for each of the individual 12 appropriations bills. That's going to be on the shoulders of the appropriators over the next month in order to reach that March 1st and March 8th deadline.
Jennifer, I want to turn to what's happening internationally and finish on these strikes on the Houthis in the Middle East. The president was asked about these strikes over the weekend, and he gave, I would say, an almost bizarre response, but I guess he said the quiet bit out loud. Are they stopping the Houthis? No. Are they going to continue? Yes. Why will they continue if they're not working?
Yeah, and I think you're seeing a reaction from Congress with the same sort of questions right now, and he's getting hit from Republicans, national defense Republicans, who are real defense hawks, and wondering why the incremental sort of approach to what is happening in the Middle East and in the sea there. That will only increase, and I think you're going to see a number of hearings and a lot of focus and spotlight from those committees of jurisdiction when the House returns after next week.
Jennifer, appreciate the update. It's good to catch up. Jennifer Flitton there of Invesco, still with us around the table. Julian Emmanuel of Evercore. Julian, I won't talk to you about the strikes and why they're not working. I will talk to you about the consequences. We've got traffic through the Red Sea down, traffic through the Panama Canal because of what's happened with water levels down. How close are we to goods inflation picking up again because of what's happening around the world?
Well, I think that is one of the things that sort of bother us about being ultra aggressive to the upside in the markets here is that part of this expectation is that inflation is going to continue that gentle glide path lower. And I would suggest that what you may end up seeing is if you have continued congestion, this could be an environment where the stickiness does remain, but in fact it ends up being manifested in incrementally lower demand, particularly given that from our point of view, you're likely to have the end of the pandemic excess savings at some time this year.
Can you just talk through what signals you're looking for that could trigger that 10% downturn that you're looking at?
I think the biggest would be an interpretation right now as far as news amongst the generative AI names. If you see earnings, and earnings has been a sort of a puzzlement thus far. Obviously, you've had mixed results. It looks like this is shaping up to be not so great a quarter. But what's really important is, again, as much of the last year, how the stocks react towards the earnings numbers. And it's not at all clear, given the run we had, that there is much more upside, even if you get the beats that are expected.
Julian, to John's point, at this moment, isn't someone's bottom line being hit by the fact that ships are having to take a much longer route and a more expensive route going around Africa?
No question about it. And if you go back and you think about those kinds of distortions in the pandemic, right, is that you still had the demand there because we didn't have anything else to spend our money on. And so from that perspective, I think we're just in a different state of affairs. There could be this stickiness to inflation, which of course makes the Fed's intended path a bit more trying, but ultimately it could wind down into slightly diminished demand.
Julian, just quickly before you run, favorite trade this year, what is it?
Wow, so we really like the names, and it's across a variety of industries that are taking generative AI and actually figuring out how to make it work. It's not just the cost savings. Obviously, that's, when you think about the financial industry commentary, they are the vanguard of the cost savings in this environment. But it's also the consumer companies who are becoming much more adept at connecting their clients, taking information, and importantly, asking the right questions to make it all work.
Julian, thanks for the insight this morning. Appreciate
Pleasure.
it, buddy, as always. Julian Emanuel of Evercore. Let's check out the markets for you about 3 hours and 5 minutes away from the opening bell. Equity futures shaping up as follows on the S&P 500, pushing a little bit higher by 1/3 of 1% after closing at all-time highs on Friday's session. 2 weeks of gains on the S&P. Can we add to it this week? Coming up on the program in about 20 minutes' time, we'll catch up with Stephen Major of HSBC on the global fixed income market as we wait for this week's ECB rate decision. Bramo, I have to say, it feels like we've had 2 ECB news conferences in the last week already, doesn't it?
We did. I mean, basically, Christine Lagarde gave a preview of it and had some spicy words about Trump, so maybe she'll, give a repeat of that, as well as push back.
3 or 4 different press conferences with Christine Lagarde in Davos, Switzerland.
Yeah,
there's another one still to come this week. From New York City this morning, good morning. You're watching Bloomberg Surveillance.
there's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Live from New York City this morning. Good morning. 2 weeks of gains on the S&P 500. Looking to kick off maybe potentially a third week of gains. In the equity market right now, the S&P positive by a third of 1%, on the NASDAQ up by 0.6. The Russell picking up here by 0.4. Attention turning away from the financials. We had earnings from Goldman and Morgan Stanley last week. Attention turning towards what we hear from big tech over the next week or so. Early February, Lisa, Apple on deck.
And before that, we're going to get Tesla, and we're going to get Netflix, and that's going to be this week. Honestly, this to me is going to be the real kahuna, given the fact that any kind of gains have been entirely from these stocks. I mean, it's kind of shocking to see the Russell 2000 still in a bear market, even as you see new record highs for the S&P 500.
Amazing to see all-time highs on the S&P 500 on a week where yields were pushing higher. 2-year, 10-year, 30-year looks like this. The 2-year currently 438.25. We're down a couple of basis points on a 10-year. Let's call it 4.1%. Last week, we had pushback from Governor Waller against rate cut talk, reinforced by hot retail sales, lower jobless claims, consumer optimism picking up. A lot of reasons for high yields last week.
But this all came from the strength that's supporting the equity markets. Mark Heffley of UBS earlier this morning was talking about how this is the beginning of bonds and stocks having their inverse relationship, and it's going back to normal, and you can have a balanced portfolio. I don't know what to think of that. I'm kind of struggling with that because, honestly, this seems like a sweet spot that could push either direction pretty quickly.
This is the United States. We need to talk about Europe as well. The data, not great at all. The euro looks like this against the dollar. Euro-dollar at the moment, 108.85, negative about 0.1%. Joked about how many times we heard from Christine Lagarde, the ECB president, just last week in Davos, Switzerland. Elisa, not entertaining the rate cuts by quite the same degree that the market seems to be.
But she did say that by the summer, and previously she hadn't said they were in the equation. So will she push that forward, given the fact that you do have disinflation and you do have a bit of softness, particularly in Germany? We're going to hear from her again in the 5th press conference in the past 2 weeks, and that's going to come on Thursday. How much she's going to really just echo what we've heard from Jay Powell remains to be seen.
And the Federal Reserve is just around the corner as well. Under surveillance this morning, your top headlines. Florida Governor Ron DeSantis dropping out of the 2024 presidential race and endorsing former President Donald Trump. DeSantis leaving the campaign trail just before voters take to the polls for the New Hampshire primary tomorrow. The stage now set for a two-way race between Trump and Anne-Marie, the former UN ambassador, Nikki Haley.
Yep, then there were two that's left in this race. DeSantis dropping out. You know, I spoke to someone from his campaign last night, and they said there was just no path forward. And now everyone, Lisa, you mentioned, is going to do these postmortems. But he peaked before he entered. Remember, he was leading Trump this time last year. And then, of course, he had that botchy release on Twitter. And really, for then, it's been all downhill.
And he wanted to say he broke the internet, and everyone said, no, it just broke. So Nikki Haley, though, of course, now saying, you know, may the best woman win. And now it's just a lady and a guy that's going to be in the race. Let's see if she can galvanize. What I'm curious is, what is the threshold for her to drop out? Because right now, it doesn't seem like there's a real path. So how big does the gap have to be when Trump wins? And how big does her loss have to be in South Carolina? That will be a humiliation.
But does she make it to South Carolina? Because it
You think there's a chance she won't?
It could be quite humiliating if she loses her home state that she once was a governor at.
What do the polls look like right now?
Not good. double digits. Trump is leading her in South Carolina if you look at the Real Clear Politics aggregate of all these polls. And, to our earlier guest's point, it's not just Senator Tim Scott who's come out and endorsed Nikki Haley. It's the current governor who's endorsed the former President Donald Trump. So she's really up against a tough fight in South Carolina, and maybe she wants to save herself from that embarrassment.
At the same time, the reason why New Hampshire is interesting is because independents can vote. So it maybe is her as a centrist candidate trying to pose the best opposition to Joe Biden, and maybe she can make that pitch in a new kind of way.
Let's turn to the second story. The latest update in the Middle East. Israeli Prime Minister Benjamin Netanyahu rejecting a deal with Hamas to release all remaining hostages in Gaza. Netanyahu saying in a video address that Hamas is demanding a withdrawal of all forces in Gaza and a release of militants responsible for the attacks in October. Public pressure ramping up for a deal to bring the remaining 132 hostages home, ramping up domestically and internationally as well, Lisa.
What strikes me as really compelling, what I'm watching, is this idea that the Israeli foreign minister is over in Europe making their pitch. And Europe is really having some harsh words with Israel, saying, if you're not on board with a two-state solution, then we can't help you. And Biden kind of splintering from Netanyahu at the same time that Netanyahu's losing a lot of popularity. I want to see whether they're going to hold elections. There's a lot of internal push for that could potentially kick Netanyahu out of office.
When it comes to the hostages, more than 100 individuals are still being held by Hamas. This is going to be a huge focus for the administration this week. Axios over the weekend saying Biden is sending Brett McGurk over to Egypt and Qatar to try to negotiate this deal. It's not just domestically that they want to get those hostages out. This administration looks like if they can get the hostages out, potentially that can lead to a ceasefire, and it just further puts a little bit more pressure on Netanyahu.
Biden's been absolutely hammered on this issue within his own party over the last 3 months. At the start of this campaign, we saw the two leaders standing shoulder to shoulder. How much space is there? How much daylight is there now between Netanyahu and President Biden?
It's a big gap. We saw Biden take a trip to Israel and give this bear hug to Netanyahu, an individual where they had a lot of friction leading up to that moment. And now it's becoming more troublesome for this administration, so much that this aid that's caught up in Congress, you have people in his own party saying, we are not going to deliver that aid to Israel without some strings attached.
Speaking of trouble for Boeing, the FAA expanding inspections to another Boeing 737 that has mid-exit door plugs, the same type involved in the Alaska Airlines blowout earlier this month. Boeing saying it fully supports the order to inspect the 737-900ER, an older generation of the MAX family. Federal regulators have yet to say when grounded 737 MAX 9 jets, Lisa, can resume flights.
I honestly don't know how things could get worse. I mean, a couple days ago, there was a video of a cargo plane, a 747 Boeing jet, on fire, literally on fire. And some of the rhetoric, oh my God, it's on fire. On social media, people posted these videos. It's just piling at this point, especially with this particular investigation. Boeing shares down more than 17%. How do they revive some sort of trust? How do they revive some sort of confidence when it's one thing after another, this sort of trickle of bad news?
Confession flying back from Switzerland. And you guys know this. I didn't take the window seat. I took the aisle with this in mind, which is kind of pathetic, I know, but ultimately it was on my mind, and I'm sure I'm not the only one.
Well, I checked to see whether it was a Boeing or Airbus for the first time ever.
What was it?
It was an Airbus, and it made me feel a little bit better. I mean, that's the
not
truth.
good.
It's not
That is
good,
not good.
and it's probably not logical, but there you go.
I had the same idea, but I didn't check, because I knew it would just give me a lot of anxiety if it, in fact, was a Boeing.
Speaking of Davos, Switzerland, a conversation that came up repeatedly last week, the reality check for EVs. Just 3 years ago, the White House went all in.
The future of the auto industry is electric. There's no turning back.
But now the auto industry is turning back. Rivian's EV deliveries falling short of estimates, Hertz offloading a chunk of its EV fleet, and Ford cutting production of its F-150 Lightning. Joining us now is Bloomberg's Craig Trudell. Craig, let's get to it. How much of a reality check have we seen in the last week?
I think the last week has been extremely eventful, but also just the last few months where we, take a look at what has happened at Tesla, the amount of price cutting that they did last year for sort of incremental gains in volume, and the extent to which that has sort of reverberated for the rest of the industry. I think we saw that in Hertz. We've seen, Ford maybe going from potentially, fearing the arrival of the Cybertruck and the potential threat that posed to the F-Series line, and perhaps not being as afraid of the sort of competitive blow that could come from that. And also, let's be honest, some of these companies really struggling with execution issues. I don't think that we can sort of absolve some of these companies of some of the failures they've had to take a Tesla on. As much as they're having some challenges of lately, they're still, really sort of in a two-horse race here with, Tesla and BYD being way out in front of the rest of the industry and making this transition to electric vehicles.
Craig, you mentioned BYD, and that's where I want to go. How much of the pullback from the electric vehicle space by American manufacturers really comes from the threat that Chinese manufacturers can sell EVs so much more cheaply, and as soon as they come to the shores of this country, prices are going to drop really considerably?
Yeah, I don't think they will come to the U.S. in part because of the trade barriers that have already been set up, and we've heard rumblings of the Biden administration, even raising tariffs that are already sort of prohibitive. I don't think the Chinese manufacturers, including BYD, really see this as making any sense trying to enter that market in the near term. But I do think that we will see, a lot of politicking around this and sort of messaging around the idea of, do we want to go the way of losing out to the Chinese? And, both sides of the political aisle will sort of fight on the basis of, do we want to sort of fold to the Chinese if you're a Democrat? And on the right,